Morning all, how we doing? Morning Ladder, Trevor and Nalia. Morning. Market's selling off hard this morning. Been very red. They're not happy with something. Collapsing. Not even open yet. So, going to do a quick overview of all the FX pairs this morning. Let's see where we are. Very sideways across the board still. Very few ADR hits. The only thing that hit ADR yesterday was Aussie New Zealand, which happens to be the one thing that I got out of, which is typical. But yeah, still very flat. I've got the VPS up here just to go through yesterday's trades. Banked 1.47% yesterday, so good day. 1.5%, sort of 3/5 of my target done yesterday. So Euro US dollar closed one off yesterday afternoon on that drop. I've still got two positions on. They're in profit at the moment. Sorry, I've got three positions on, two of them in profit, so I'm up 0.3% on that. Probably going to take that off at 0.5% and get that banked. Pound odd, took that one off yesterday. It's pushing up this morning, so I can get that position back on again this morning, depending on obviously what price action does. What else did I bank yesterday? US dollar yen, took one off. Still got the one position on that at the moment. So one off, one long still. I've just taken another New Zealand dollar CAD short this morning. Just the one initial position. So that's the one that I took off yesterday. And I've added on again. It came down and hit target as well, but I put a trailer on that one yesterday because I'd already banked some on the New Zealand dollar CAD, so this was kind of just an add-on position for extra profit. So I've just taken one more on that, and the Aussie dollar, New Zealand dollar, those were the two that I took off before we popped up and hit ADR. We've pulled back down again now though, so so that one's done. So this is where I'm sitting at the moment. I contacted Forex about my spreads yesterday, and basically, they said tough. That's what the spreads are. And I said to them specifically about New Zealand dollar CAD and the spread on the New Zealand dollar CAD, which was is between 5 to 6 pips. It's 7 pips at the minute. It's absolutely huge. And they blame that on the volatility of the Canadian dollar. Because the other New Zealand pairs they're still bad. New Zealand is always bad. It's the biggest spread of the lot. But the other New Zealands aren't quite as bad. So, yeah, so that was the answer to that. So basically, I've set up a new ECN account. Well, I've just reused one of my ECN accounts. And I'm transferring all the money over into ECN. So I'm closing this account down. Because it's too widespread. So there you go. So that's positions out open at the moment. I'm going to try and get flat on this if I can today. It would be nice to be able to get flat on it and then start again. So this is the new account. Obviously, it's just empty at the minute. So I'll be putting any new positions on in here, and obviously using the EA on this account. Where are we? Calendar today. We've got OPEC meetings all day, so potential volatility on oil if you trade it. And obviously Canadian dollar. We might get some decent movement off of the CAD. We've got oil at 3:30 this afternoon, although that's not on here because it's yellow news, but 3:30 Wednesday is always oil inventories, however many barrels we've got floating around. We've got Mester speaking this late morning, and then we've got GDP for the US dollar at 1:30. GDP is very hit and miss. We do get movement off of it, but usually it's got to be pretty unexpected for it to actually have an impact. You can see it's always kind of within 1 percentile, 1 or 2 percentiles of the forecast. So it doesn't often have a big impact. We don't really get too many spikes off of it. It just doesn't. you know, the GDP is easy to report, and they don't really get it wrong very much. So not expecting a big move off of that, but just be aware of it. 130 for the US. And then this afternoon at the ECB forum, we've got Lagarde, Bailey and Powell all speaking at 2 o'clock. So this is where we potentially could see some volatility coming in across the board in Forex pairs and in the indices. So we need to be aware of this. This is 30 minutes before US market open. So we just need to be a little bit aware of what's going on there. So apart from that, there's no other news today. So it's a bit of a light news day again. Main news is starting tomorrow with PCE and then PMIs on Friday for US dollar. We've got GDP for the CAD as well. So it's a really light week this week for news. Overnight news, nothing much. The usual rubbish about ECB. We're going to put the rates up. We know, you've told us many times. You keep going on about it. Aussie retail came out better than expected. So strong for the Australian dollar. Crowd has been speaking. I didn't see that. Just recapping old news by the looks of things. So apart from that, not a lot else. Oh my God. Didn't see that. Last night. Okay, an agreement has been reached with Turkey for Sweden and Finland to join NATO. So they're opening the doors for Sweden and Finland to join NATO. That's going to pee Russia off. Didn't see that. Okay, just be a bit careful with everything today, just in case that's not going to do anything today. But Russia might respond to that. They haven't responded so far, have they? That's interesting. The main blocker for Sweden and Finland was Turkey not liking them joining for various reasons. And it looks like they've reached an agreement that has pleased Turkey. So it opens the door for Sweden and Finland to join NATO. And obviously new NATO members on Russia's doorstep is what this whole thing is about. So, well, it's not what it's all about, but partly about. So, yeah, interesting. Okay. So there's news recaps. Market's just opened. Whoa, Euro US dollars having a bit of a go this morning. Got some volatility coming in on the euro. Big strength on the euro for some reason at the open. We'll start off with morning Kennelly. Don't know what your first name is, but that's surname. We'll start off with indices. So DAX. The other nice thing about this ECN account is I get all my indices in the same account as well, which is nice. I just haven't got any data, unfortunately. That's annoying. So DAX, basically, we had another down day yesterday. Lots of highs, rejections on the highs. We had a big sell-off yesterday afternoon. So, yeah, continuation downside. We got a break of this big control candle, but it rejected. Down here. So we broke back up inside. I'm looking for, I was looking for basically this high to hold and them to come and test this high, but they didn't. So I think we're just going to continue down and break out these lows at some point. So looking short on DAX. NASDAQ, beautiful 3-bar reversal. This was a love. I made $2,100 and something dollars yesterday trading this drop. It was lovely. It was textbook. It was easy. It was just one of those days. Trend days in the indices are fantastic. Yeah, lovely drop. So 3-bar reversal on the daily. Continuation down, I think, today. Same with the S&P. Nice 3-bar reversal gone in at the 24. Textbook 50% retracement. Remember I said we're looking for a 50% retracement on this move, or on the larger move, which we kind of would have got as a double top really. But yeah, they've gone straight in at the 50%, starting to dump the market. So that may well be a nice move down. And the Dow, so all the same. So looking for shorts this morning. We'll see. Wait and see what the market does at the open. But yeah, certainly started weak this morning. So there's your indices, all bearish, obviously. I mean, we're just bearish across the board on all indices. We have been for ages. So coming back down to 97.67 on NASDAQ and 3,400 on the S&P. So yeah, so all good for continuation shorts on those. Oil yesterday, we had a bit of a push up. Sorry, not yesterday. We had a bit of a sideways day yesterday. We had a bit of a push up. We're looking for 118 to 120 a barrel in the next few weeks. I think this could do this in the next week, really. We've got OPEC meetings today, so you probably get quite a lot of volatility out of this. It's sideways at the minute. May well wait for OPEC meetings to be over. I think OPEC's tomorrow as well. Yeah. So look for volatility on that and the CAD. But I think we should get a decent push up. We're calling 150 a barrel eventually, which is miles way up there somewhere. So looking good on oil if you're trading that for longs. Not looking good if you're holding Bitcoin. This thing's coming down. Have I got old data on this? I want to see if I've got... Yeah, I have. Good. So 5k, I reckon. Somewhere around there. Morning, John. So yeah, 12k definitely. Could even go to 0. I don't know. But yeah, I feel so sorry for these people that are buying Bitcoin down here. There was a... I don't know who it was, but I was just flicking through YouTube, just on a sort of, you go into those spirals on YouTube where you just follow video after video after video. And I was just watching a guy that was trading Bitcoin, who's taken out a bank loan to buy more Bitcoin because he's lost so much on Bitcoin. I don't know, but anyway, yeah, that's what he's done. And I went off following videos from there and ended up on a finance channel, quite a big finance channel, and there was a guy talking on there about how they are averaging into their Bitcoin investments for their customers, and this is basically a hedge fund, and they have a percentage in crypto. So obviously hedge funds and investment portfolios basically spread the risk across commodities, across financial pairs, across lots of different sectors, basically to spread the risk. And they've got 30% at the moment risk in cryptocurrency, not just Bitcoin, in multiple crypto. And they are averaging in to their position trading, because that's what banks and institutions do, like the same way as I do. I position trade. So they're averaging into this drop. I don't know where their average is, but they're averaging into this thing still, which I find absolutely crazy. And this is a bank, a fund managing billions. So yeah, wouldn't like to be one of their customers. But they've still got faith in it. They're buying the lows, apparently. I just don't want to be buying a low that is coming down like that when you've got every indice under the sun agreeing that we do not want to be longing stuff at the moment. Anyway, we'll see. I haven't subscribed to their channel, but I might subscribe to their channel because I want to try and see if I can find out what happens. Okay, so yeah, so that's crypto and indices and all that stuff. I'll do gold as well now because I don't trade gold, but I know some of you do. Gold's still stuck. We are gradually still declining. We're in this ever so slight downtrend at the minute. I don't really know where gold's going, but I would be looking to buy the lows down there or there. It's not gone anywhere since yesterday, since last week rather. Yesterday we had a little push up, we've had a little push down. It's not done anything. So any of these lows really could work, but I'd be looking really as a safe trade to buy somewhere down here and wait for a week of movement up. But gold not really going anywhere, flat as a pancake, so nothing to report there. By the way, I'm going to go through my futures platform this morning. I'll wait until we've done the FX pairs, because a few people have been asking me about futures. I've been talking about futures quite a bit in the Telegram group. So I'm going to go through the futures platform. I've got it set up basically so that I can show you the whole screen now, which basically gives you everything for futures as well. So right, but we'll do that at the end. So I was just watching what's going on with the indices. Okay, so we've got nothing hit at the moment on ADR. We've got nothing hit on the weekly ranges. This is the first time for a while I've seen no weekly ranges hit by Wednesday, which is unusual. Just shows you how flat the market is at the moment. Obviously, we've got no news this week. It really feels like we're coming into summer trading early, which is not good. But summer trading is low volatility and a lot of sideways movement. So I don't think we're going to get very far this week by the looks of things, but we might do off a GDP this afternoon. We might get something hitting. But yeah, very flat this week. We've got nothing really getting anywhere close either. So it's a range-bound market at the moment. Lots of sitting around, doing absolutely nothing, waiting for things to play out. No ADRs again hit. Monthlies obviously we can ignore. So there's nothing to see on average daily ranges or weekly ranges. Hourlies we've got a few at the moment. So Aussie dollar CAD, very nicely extended to the downside. This is a short, obviously against the CAD being strong at the moment, so I would continue going down on this one. Not really looking for a long. You're probably going to get a bit of a pullback on it, so look for these lows. Really not much room, so not really good opportunity at the moment. I'd like to see something get a little bit more extended than that is at the minute. And RSIs, you want to see RSI sort of coming from the highs really, and a big drop like that. That's when we get that extension and then we spring back. This has just been gradually grinding down, and likelihood is gradually going to grind up again, which is what we're seeing with the market at the minute. So so yeah, not particularly good looking long opportunity there. Euro Swiss, same thing. I wouldn't be looking really for longs on the Euro Swiss at the moment. This is obviously has been a massive short. Euro is very weak now. Obviously the Swiss franc is very strong. That is going to change, but this is going to become quite a difficult thing to trade, I think, when we get the rate announcements on the euro. Purely because euro and Swiss tend to move together. We've got a massively strong Swiss franc off the back of their rate announcement. When the euro puts theirs up, they're probably going to strengthen the euro, which means that we're going to have a strong currency against a strong currency, trading partners in the same zone. It's just going to go into sideways movement. So I think we'll find the ADR dropping on this. So at the moment, I would be interested in shorting when we get back up there, but not really interested in longing this because of the strength of the Swiss franc at the minute. So probably will have a bit of a pullback, but the problem with all of these is you're not going to get far before I think we're going to get either an accumulation or another drop down. Same with the pound Swiss. It's a short. It is extended, but yeah, not really interested. 4 hours, we've got pound Swiss extended. Again, is a short, not really interested in longs. New Zealand CAD is very extended. I have just taken another short on this. I left the EA running on it to try and get me into another short on a pullback. It's got me in right down the lows here, which I'm not particularly enamoured about. So I might flatten that trade today because it is very extended. I'm expecting a pullback on this one. But the reason I'm kind of leaving it on at the moment is obviously OPEC today, and we've got oil figures coming out. So that might give the CAD a little bit of a push, which probably will only be a temporary. But if it's temporary enough to get me out of the trade with a profit, that's fine. It's unlikely the CAD will weaken off of oil. So so I'm holding it at the minute. I'm just looking for maybe a small little 0.1, 0.2% profit out of it. But yeah, that's due for a pullback, that one. And New Zealand dollar Swiss, again, don't really want to be longing it. So all the RSI extensions are the wrong side at the moment. We haven't got anything that's pulled back. So all these Swissies I'm looking for longs to get back up to there and then shorting it. I'm not going to take longs, but I'm looking for a pullback or an accumulation to allow the 24 to catch up, and then it will drop from there. So either way, I'm looking for this gap between the 24 and price to shrink so that I can get an opportunity to get in short, but not at the moment. It's just too strong, the Swissy. So that's all of those. Nothing really of interest on RSI extensions at the moment. Obviously everything else is flat because the market is just very, very flat. And so are the indices today, very flat. We had that little dump at the beginning and it's all gone a bit weak. Whoops. Aussie dollar CAD. So we'll start off. I'm just gonna whiz through all the pairs quickly, just to give an overview and see if there's anything of any excitement whatsoever. I don't think there is. So what I've got into and got out of this week is good, and what I'm in at the moment, I'm quite happy in. So Aussie dollar CAD is a short. We are out the lows here, so we're getting extended now on H4. We're just about to alert on H4, so potentially we're going to get a bit of a pullback. Canadian dollar is strong, so I'd be looking for some kind of pullback into either this accumulation here or ideally back up to that level, which was a triple bottom which broke, and then touching the 24 coming out of there. So I'm just looking for a pullback basically to get in short on this one. I don't really want to take longs on it at the moment. Obviously the 24 and the 72 moving average are your friend at the moment. You want to be trading in line with where current price action is going, I think, at the minute. Aussie dollar Swiss, same story. Not getting into this until this pulls back. It's just far too extended. You could take shorts on every breakout. One of them is going to stop. One of them is going to be a false head and you're off back the other way. So too extended. Aussie dollar yen is a nice looking long. The yen, we still not get any signs of any strength coming out of Japan. So until further notice, we should be longing everything against the yen. At the moment, the Aussie is very weak. Hence, we're getting this kind of contraction at the moment. So we've got symmetrical triangle formation. Got 1, 2, 3, 4, 5. Looking for break and up. So where we've rejected the 24, they probably had an alert. So you haven't got an alert yet. That alert on M15 could well be it. Just about to get one on M5. So you've got a contraction going on, very nice contraction going on at the moment. At some point, obviously, it can't contract forever. It's going to stop, wherever you want to put it. So we're going to get a break. At the moment, bias would suggest we get a break to the upside. The danger of this, obviously, is we just go with we don't get the symmetrical triangle break. We just get an accumulation out at the end of the triangle. That does happen. And then you're looking for, obviously, a range break. But yeah, at the moment that's really nicely contracted, coiled up, ready to go. So long opportunities on that. If you want to take a safe trade on this, take a break of that H4 candle, put a pending order above the high. If you want to get aggressive, wait for your M15 entry or M5 super aggressive. It's rejecting at the moment. Nice long wicks there holding at this resistance. So yeah, but looks good for longs. I've got US dollar yen long on at the moment. I don't really want to overload on the yen. As I said earlier this week, I just don't want to get too much yen exposure on, because Kuroda is notorious for turning around and just going, right, we're going to do this. And then all of a sudden it's like, whoa, or whoa, one or the other. And before you know it, you've got, you know, a move like that going on. And I don't want to be in two yens at the same time when that happens. We are going to get a decent amount of strength coming off of the yen at some point. I just don't know when. So I'm just watching my exposure unless it looks amazing. But that still looks good for longs, Aussie yen. Aussie New Zealand, I got out of that one this week. And we pushed up and did an ADR hit on this one yesterday. It's pulling back off of ADR now. So they think it's got some 125 ADR yesterday. Yeah, about 125 ADR. And it's pulled back off of 125 ADR. So when you're taking the ADR reversals, when you get the ADR hits, look for somewhere around a quarter to a half an ADR pullback. So in this case, you'd be looking for something in the region of 35 pips off the high. You've got 50 so far. So that's worked out very nicely, that Aussie yen. 4 hour wise, I still like this as a long. I just realised I need to get that other account set up on the EA, on the VPS. I'll do that when I've finished. So I might take one on this. I'm going to give it a little bit of room because there's a fair spread on the Aussie New Zealand because it's a New Zealand pair. So yeah, reversal alert. I'm going to take a long on the Aussie New Zealand and scale back into that one. I still think that's a long. It's nicely pulled back to the 24 and we're getting a little bit of rejection there. So this is basically in a minute going to give you the retest arrow on the reversal alert. So this is the reversal retest. And then looking for longs back up to those highs. You can see where my TP was, back up in that gap previous. So I'm going to get in another Aussie New Zealand long. Aussie US, looking for shorts, looking for US dollar strength. Got GDP figures this afternoon, that could be the catalyst, but looking for shorts on that one. It's just not gone anywhere, as you can see, for the last week. Really, I mean, since we had this drop down and that week closed, we've not gone anywhere. So, yeah. And then when we do get a catalyst, hopefully to power up the US dollar, we're going to drop straight into support. So likely to get a little bounce off of there. So it's just not looking very good at the minute. I'd be interested in taking it up here if it got up there. So double top in there. Because we know if we break that level, we're going to run into all this 2 week balance accumulation. But yeah, it's not just not in the right spot. CAD Swiss looking for... well, would be looking for longs on it. I think this is the one that's got half a chance of this, and the US dollar has got half a chance of actually getting some pullback against the Swiss franc. If you look at the wicks on the 4 hour at the moment on this, especially these last 2 4 hour candles, we're very bullish. We've pushed down, we tried to reject, we pushed down, we had another go at rejection, we pushed down, we've tried to reject, we got a lovely big bullish engulfing which gave us a reversal alert, and since then we've pushed down and rejected, pushed up, rejected. We're just holding this level at the minute, which is good. It's a good sign. We've got potential Canadian dollar strength off the back of OPEC. We've got the CAD GDP figures. Is it GDP tomorrow? Yeah, CAD GDP figures tomorrow as well. So there's a lot going for the CAD. And although the Swiss franc is very strong, it has gone into a very sort of strong neutral sort of, morning Jesse, sort of stance, if you like, with lots of downside wicks. So I think this looks good. But with any CAD, any Swiss trade at the moment, I would be interested in only taking it with a stop loss. So if you're going to take this off of the hourly, maybe take a break of the hourly high, or get the reversal alert, which is going to be the same thing basically, on M15, and stop under this low. In fact, I put stop under that low from 2 days ago, because if they do drop it, they'll go for that liquidity there. So stop somewhere down here. So this one has got half a chance, I think, of getting a good move today. It's risky. I'm personally just not going to take it. I just don't want to take any stop loss trades. I'm trying to build positions. So, but that's what I would do with it, really. If you're interested in getting into it, as I say, the Swiss franc is very strong. It doesn't show any signs at the moment of letting up. It's not weak, but it's not also particularly strong. We've had this massive move, and it's due a pullback. And at the moment, the wicks basically are saying we're getting ready for it. Every sell is being countered by a load of buy pressure at the minute, so it's good. CAD Yen long. So this is a good looking long. Obviously, you can see I was in this one last week and got out. Should have got back in, didn't. It's kind of a bit high now. Obviously, you got a little bit of room up to there. Again, this is stalling out. I'd much rather take it on a deeper pullback, but looks good for longs. Swiss yen is just long. I can't take it up here. I want it back here. So I'm not taking that one, but I would be more long than short. All the euros at the moment are a consolidatory mess. I'm in the euro US dollar short. I would be short at the moment. The rate announcement is coming out. I'm not sure when it is. Does anybody know when the rate announcement is forecast for? Holiday. There, right. So we've got a month basically. So it's the 21st of July. We've got the ECB rates. So we've got 3 weeks basically of potential sideways to weak movement on the euro. So at the moment, anything you get into on the euro as a position, if it goes against you, you want to be kind of looking to get out of it within the next 2 weeks, because they're going to start potentially to put a little bit of money into the euro leading up to the rate announcement. So at the moment, I would be bearish on the euro pairs. So where this one is at the moment, I'd like to see RSI extensions either on the hourly or the 4 hourly, ideally, or any decent double tops, and taking shorts there. You can see I got into that short on that double top there, but I didn't like it because it pushed out so violently. When I got back to a break even, I took the break even on it, and I'm glad I did. I could have got out with a decent profit on it, a couple of positions, but it just came back up and it's not really gone anywhere. So we're in a holding pattern at the moment on a lot of these euros. So any trades you take, you want to be taking them as high as possible, and assume that if we do get this kind of breakout, we're going to pull back down and sort of hold for the next few weeks. Or if the other currency you're trading against obviously gets some strength, like the CAD, for example, gets decent news, you'll find a Euro CAD will drop, but it'll probably recover back up again. So I'm looking for shorts, and it needs to be up here, or it needs to be extended on the RSI. So at the moment, they're just not. It's just not in the right place, that one. Euro CAD is already dropped. I'd be looking for that. As you can see, I took the Euro CAD up here, loads of trades. and then it dropped dramatically when we got this breakout, which didn't seem to be holding. So it needs to be up here for me to get interested in it. I'm not trading it down there. But saying that, obviously, if you want to trade this off of news, CAD news with OPEC and GDP, you're quite possibly going to get a drop on it. So bear in mind you're taking a short when it's extended or getting very extended. So don't get greedy with it. Take half an ADR out of it maybe. But I personally want to see it back up here. Euro Swiss, not interested in getting in front of that. So again, same with all Swissies, pullbacks and then drops. Euro Pound is only 70 ADR. It's a sideways mess. We've got a weak currency against a weak currency. You get accumulations. It's just not got enough range to even get interested in it. If you take it down here, you might have to wait a week to get out with roughly half to 3/4 of an ADR. It's just not worth it. Euro Yen longs. So Euro Yen's pretty nicely set up. Again, we're not really going anywhere. You can see where we opened week before. We're 1/4 of an ADR away from where we opened a week ago, a week and a half ago. Just no range on it. I'll be looking more for long entries than shorts. So I'll be looking for RSI extensions to the downside on the hourly or on the 4 hourly. Any kind of pullbacks into 24, any ADR extensions to the low. Right now it's just sitting sideways, so I'm not interested. Euro New Zealand, pretty much the same thing. Looking for pullbacks so I can get in long. Not getting anywhere. It's just ever so, this one didn't even get back there. Pushed up. Just looking for any kind of deep pullback to get a long opportunity out of it. So again, pullbacks into ADR lows, pullbacks into the moving average, pullbacks on RSI on the hourly or 4 hourly. On these, if you want to, you could get in on 15-minute pullbacks. But you're not really getting them either, are you? You got one there, M15. You got a pullback 4 days ago. Nice little trade out of that. That's all you've had. It's just sideways. It's just very, very difficult to find opportunities for mean reversion. It's very difficult to find opportunities for trend. I mean, even if you're getting trend trades, everything's just taking forever to play out, isn't it? So, Euro US dollar, I'm in short. Still on the other account. We got that break. So remember I said, I posted this in the Telegram group yesterday. I said all the trend junkies will be watching this and they'll be bouncing long. And the 4th time you hit a trend line is normally the one that fails because everybody sees it. It's too obvious. So the banks go, oh, we'll let you have your bounce. We know where your stops are. Bang. Bye-bye. It was exactly what's happened. So I got out there because I was expecting a bounce. We didn't get one. We got a little bit of a bounce, but I was expecting a deeper pullback before they came down and ripped everybody. Try and entice a few more people in long. Everybody that didn't see it and didn't get in preemptively, wait for that to push up, and then everyone goes, oh, look at that bounce. They'll get in there expecting it to make a new high in the channel, and then they come down and take out their stop loss, which is what they've done. So yeah, I'm in short on this one. I'm not sure where I'm going to get out on it. This is where I would like to get out, which is well within ADR today. ADR's down here, so I think there's a good chance of getting down there. So if we can get down to here, I'm looking for a 0.5%, 0.75%. So if we can get down to there later, I'll exit that one completely. So yeah, it's a short. But obviously it's got potential with GDP figures and things coming out for the US dollar, obviously of going a lot deeper. So there's a lot more room on it. Depends how greedy you want to get. Pound odd, shorts. At the moment, market structure on this one is looking more bullish. We have come up into this accumulation. I'm out of this now. I was short on it and I got out down here. And on this drop, am I out of pound odd? Hang on a minute. No, I'm not out of pound odd, sorry. I've still got 2 positions on this short. Yeah, so I'm in 0.4% drawdown on it at the minute. So it's pulling back. So I'm looking for this to hold as market structure and looking for a pull back down to these lows, and I'll be exiting down here somewhere. As and when I will add again if I need to. At the moment, I'm not anywhere near needing to add again on that one. So, but yeah, shorts on that one. So we're up at the 72. So trend when you're playing the daily, the monthly and quarterly moving averages. The idea behind the shadow is if one of them fails, the other one supports. So we get a break down to the 24. If the 24 doesn't give the reaction, the 72 usually does. So broke down there, pulled back into the 72, into the 24, 24, 24, 72. You get a reaction. Didn't get the bounce in that case there, but so this is what I'm looking for to hold, and then obviously give us a little bit more of a push down. The problem we've got at the moment is the Australian dollar. So the pound is very weak at the moment. The Aussie's just really weak at the moment, and which is giving the pound an opportunity to push back a little bit more than normal. Still nothing positive on the pound, so still looking for shorts. If we go into an accumulation, we go into an accumulation. There's nothing we can do about it, so may have to sit there for a week waiting for something to happen. But we've got plenty of news coming out next week, so we should get some decent movement off of that one. But shorts, pound CAD short, got into this one up here. It's too extended, just waiting for it to pull back to get into shorts again. So any kind of pullback, either into resistance or back up to the 24, failing that, coming up to double top any of these levels. So some kind of reaction, but I want it to get back up into here somewhere, ideally, to get short again. Pound Swiss, not interested. Short, I'm not mean reverting that. If you want to mean revert it, have another go. 4 hour break. You may get through there, you may not. No idea. It's all down to the Swissy, and the Swissy's just not letting up, so I'm not interested in longs. I want to short it. Pound yen, again, pound has just not got any legs at the minute. It's weak. We're symmetrical triangle formation starting. So this week should look for that break on yen weakness, but we've not got enough pound strength. We've got no news catalysts on the pound apart from Bailey talking tomorrow, or this afternoon rather. So yeah, it's just nothing. Is it tomorrow or this afternoon? Yes, this afternoon, the news. So yeah, it's just no opportunities really, unfortunately. Pound New Zealand, sideways mess, not interested. It's just a sideways mess. Really is. Range bound, so take a short up here, take a long down here. If you draw a zone on this from that high to that high, and in fact I'd use this one here, yeah, and from that low to these lows here, yeah. If you get anywhere near there, go short. If you get anywhere near there, go long. It's all you can do with it at the minute, isn't it, really? I'd much rather be shorting it than longing it, but it's just sideways mess. Middle of the range is just not a good place to take a trade. Pound US dollar shorts, waiting for some US dollar strength. Again, got GDP coming in, looking for a break of this low. So good short opportunity we had yesterday. On Monday. Bit of a big reversal alert. That I don't like those ones. But yeah, short. Just not, again, same as everything else. It's at the moment it's very, very sideways. We've had a week of accumulation. We're in the second week of accumulation. Until we get a break, it's nothing really to trade on it, but shorts we're looking for. So if we were to get a break back up into there for any reason, for example, negative GDP news on the US dollar, I'd be looking for short out of there. New Zealand CAD is a short. Obviously I got out of that one already. Shouldn't have, because it's just not stopped, but you know, you can't tell what's going to happen. So shorts, we got down to target on it down here, the lows. So potentially we are very extended on the 4 hour. We've got a pullback coming. I'd get in short when we get the pullback. But I get a feeling the Canadian dollar is just going to strengthen at some point today and push this back down. We may well get a weakness off the CAD. If we do, then I'll be interested in starting to look for shorts again on it. New Zealand Swiss, not interested in longing. New Zealand yen, I am. So Aussie and New Zealand yen aren't particularly strong at the moment. But we've got a nice pullback area here. So we pulled back into the 61.8 and pushed. We're pulling back now into the 24 and back into the 50 area. But again, we are just accumulating. So I'd be looking for long opportunities on it, which is pretty much now. As I say, I've got the US dollar yen on, so this is the same as the Aussie yen. I'm not really interested in it myself, but it looks good for longs. With the yens at the minute, what I would do is get in and get out, which is what I've done with the US dollar yen. I'm getting out of the positions as fast as I can when they get into profit. So it's a good looking trade long, reversal alert, but I'd probably just look to try and grab half an ADR out of it. So if we make a new high there, though, you probably want to hold it, wouldn't you? But yeah, looks good. So we're in a range at the minute. We're down towards the bottom of the range. So longs. New Zealand US looking for shorts. This is the same as the Aussie US. So yeah, same story basically. Looking for a pullback up into there and then a drop. The US pairs. US CAD is the difficult one at the minute. I said about this bounce yesterday, I kind of like it, but I don't want to take it ahead of OPEC and CAD GDP figures, because the likelihood is we're going to get CAD strength. So I think if we get a push back down into the 24.72 off of CAD strength, I might be interested in taking it there, because that'll be retesting again down here. And that'll be a nice 50% retracement of that move. It's a difficult one because you've got the US dollar expected to strengthen and you've got the CAD which should be strengthening as well. So it's difficult. There's no directional bias on this pair. However, I would always be on the side of the US dollar. They're still saying about recession. We're not going to have a recession and we're just going to get a slowdown for a couple of years. They don't see it being sustained. They don't see it being long. I'd like to see what they say about that in a year's time. But the market is bullish for the US dollar at the minute. So I'm going to remain bullish on the US dollar, although at the moment it's not showing much signs of activity. But then again, neither is anything else. So so yeah, I'd be interested in it a little bit further down. This is kind of where I should have looked to get in, but again, ahead of the CAD or the CAD news, I just didn't want to. So I'd like to see the CAD strengthen, if possible, today. And then I think I'll be interested in getting into that either this afternoon or tomorrow. But I'll see what happens with price action on it. US dollar Swiss, it's holding up really well. I've tried to trade this week. I got stopped out on it. The original stop I put in place on this is holding. So the entry I took, the original stop loss was here. As we pushed, I moved my stop up, which they took out. But if I hadn't have moved my stop, I'd still be in this long now. There was no opportunity to get in yesterday on it. No movement on it yesterday. And again, at the moment, so far today, we haven't moved. So this looks good. It still looks good as a long. I'd still want to take it with a stop, though. The problem is stop loss placement at the minute is difficult. This is where you should have your stop underneath the ultimate swing low on the 4-hour chart. But there's multiple levels depending on how aggressive you want to get in. I don't know whether they're going to come and sweep liquidity, whether we're just going to get a push or what's going to happen with it. But obviously this is the Swiss franc. So at any time we could just find them dump loads of money into it. especially if we get any more news coming out of Ukraine or any response from Russia towards the new NATO membership agreements. So it's a tricky one, but I like it. I really like it long. I just don't want to take another stop trade because I got stopped out. Every time you use a stop, you get stopped out. This is why you don't use stops. But anyway, so yeah, I like it long. US dollar yen in long already. So out of that one there, out of that one there. I've got another one on at the moment, which is 0.04 in drawdown. So my entry is from back here. It's there. So I'm pretty much break even on this one, but looking for longs. That's it. That's all the FX pairs done. So anybody got any questions on anything else you want to look at or cover in more detail? Anybody in any drawdown on anything they want to have a look at? Euro US dollars coming down, or rather pushing up at the moment again. And pound odds going the wrong way as well. Be nice to get flat on those other positions. Anyway, so no one's got anything else to look at there, no? Cool. Okay. Right. We'll go through the future stuff now. So hopefully you can all see that. This is a 42-inch monitor that I run off of my main screen. So you're seeing the entire monitor. Hopefully you can see everything. Obviously it's a big monitor, so I'm not quite sure how this is going to come across on YouTube. I can't really zoom into stuff, so hopefully you can see it all. But I'll give you a quick rundown, basically. If you've got any questions on anything, just fire away, basically, because a few people have asked me about the futures setup. So if you've got any questions specifically, though, obviously just ask. Do you set your stops always around the 4-hour swing low when you enter on M15? No, I've set my stops where I think they look good. So the ultimate, yeah, you will always get a decent, also a lower chance of getting stopped out on 4-hour if you use the 4-hour low, because that is usually the swing low. But you're going to get a tighter entry on M15, which means you get a higher position size and obviously a better reward. So it's always that playoff. There's no right or there's no wrong. Where you think it's going to go? So if I was seeing something, for example, can't use that as a chart, but let's say we saw this bit here. Had already pushed down, then pushed up again, and then pushed down, I'd use that. You could use that, which would be the higher swing on a higher time frame, but that gives you a tighter, better entry. So there's no right or wrong. It's what you. It's personal preference. Looks like the Matrix. Yeah, does look a little bit like the Matrix. Wow, US dollar yen getting a rocket in. Is it US dollar yen moving, is it? I've got the FX open on my laptop next to me, so I can watch what's going on, but not a massive amount going on. Euro US dollar's just gone into drawdown, ever so slightly. I think I've got a feeling it's going to be one of those days where I'm just going to be sitting in 0.5% of drawdown all day and I'm not going to be able to get out of anything. But anyway. So this is Jigsaw. You can use any software. This is Jigsaw. you basically, if you're trading futures, the most important thing really with futures, because of the high tick size, you want to be trading and scalping low time frames. So you want to be the vast majority of professional traders who trade futures are either scalpers or they are intraday swingers. So you're in for maybe an hour on a swing, or you're in and out within minutes and seconds. So the most important thing is this area here, the dome or the DOM or the ladder, whatever you want to call it. And the most important part of the ladder is the footprint or the volume profile. And this shows you where all the orders have been executed so far. So this is showing me the Globex session of the ES, which is the S&P 500. And this basically shows me that the point of control for today is 38.30, and there's been 3,554 contracts executed at that level so far today. This is the volume weighted average price, 38.27.25. There's been 2,158 contracts there. But we can see basically from the profile that at the moment, this is where the vast majority of the trades have been executed. This is what's called the value area low and the value area high. This is basically this grey purple area is 70% away up and down in volume basis from the point of control. So this is where potentially people would start to buy up, because this is a good area, a good distance away from the highest volume. And that is where people would tend to sell down. I don't use volume area and high and low very much myself personally, but that's what they are. And then all these green areas are the outliers, where you haven't had a lot of volume traded. So on the ladder, that's what I've got there is the volume. This is obviously price. This is the bid and the ask. Okay, so the bid is basically showing you intent to trade long. So all these numbers here are, there's 42 contracts sitting at 23.25. There's 55 contracts sitting at 22s. So these are all people who've got orders in the market and are saying, right, I'm going to go long. So if I stick an order in here, yeah, I become one of those 37. So I am number 37 in the queue to go long at that level. Yeah. The ask, you've got the bid obviously, which is going long. The ask is going short. The columns in the middle are actual market orders that have transacted at these levels recently. So there's been 22 contracts gone short there. There's been 14 contracts gone long there. We've just done 9 contracts there. We've done 3 contracts there. So these numbers will change as we trade at these levels. If we hit long, short, long, short, long, short, long, short, it will build up numbers. And if it moves away, it will leave those numbers in place, as you saw there with that 11 and that 4. If we come back to those levels, it will then redraw those numbers. So it's just showing you what's being executed right now, live in the market. Over here, we've got the trades that have been executed at those levels accumulatively. Yeah, so this is what's happening now. This is what has happened at that level for sells and buys to make up that 22.58. Yeah, in total. These numbers won't be accurate because obviously these numbers are only since you start your platform. This is total. So since I've started the platform this morning, there's been 1,000 contracts traded there. But in total today, since the Globex session opened, there's been 22.58 traded there. And you can clear these columns at any time, so I can clear all that away and reset them. So that's those columns. This column on the right shows me what basically is happening with the contracts at these levels. So this is showing me that people are pulling buy orders. So if it's a negative number, you probably can't see this very well, like a -6 for example, it means that there was a -7 there. So it means that there's 7 contracts pulled at that level, which is basically the equivalent of me going like that and then that. That's me pulling a contract. So I'm adding a contract, so that would be a +1. That would be a -1. So this is showing me what's happening with contracts. And that is also shown on what they call the auction vista or the heat map over here. So I can see here on the heat map there are a load of contracts there. There's a large number of contracts, 77. Yeah, you see there's a bar here within that bar that shows you that there's quite a large volume of orders. This is the easiest way to see that. So there's a big bulk of orders sitting there, which price will likely get attracted towards, and then depending on what happens up here, we'll know whether or not we should be shorting or whether we should be blowing through that level. And you can see up here there's a load of contracts sitting there, 177 contracts sitting at that level, big white line, and it shows you whether or not those contracts have been there for a long time. That 177's been sitting there for ages, or in the case of this 77, they only started adding them here, so they haven't been there for quite as long. Yeah. So that's basically what that is, and this is historically what has been happening with price. Okay, and this is going back. You can adjust how far this shows back, but we're now at what are we? 857. This is going back to 751. So this is approximately the last hour's worth of trading. So I can see the market opened up, went long, and since it's gone long, we've kind of been sitting in accumulation. But I know that because I can see the volume profile telling me that as well. We opened, we had a flurry up, and most of the volume traded so far has been here. Yeah. So that is a visual version of this. Everyone with me so far? This is a power meter. This basically shows me what is happening in these columns here, or rather this column here, or both of those really. It's this one here really. So this resets automatically when I take a trade. So let me just switch over. I'm going to switch over to a sim account quickly. So if I go short, you see this now says 439 contracts short and 325 contracts long. So if I now let's take a short here. I'm not going to get filled now, am I? Let's just go in there. Oh, come on. There you go. So I'm short. So you see this is reset now. Completely reset. So what this is showing me is when I get into a position, just take all those off for a sec, it's showing me since I entered that position, what's the market doing? So I've gone short, and at the moment the market is longer than it is short. So there's more buyers in the market. Since I pressed that button to go into that trade, it's telling me that I'm on the wrong side at the minute. There's 111 contracts executed long and only 70 odd contracts executed short. So it's telling me right now, looks like I'm on the wrong side of the market, because since I pressed the sell button, there's been more buyers. More buyers pushes price up, obviously. This column here shows me the sort of front-loaded contracts. So it's the first three levels of the DOM. Yeah. It shows me how many buyers and sellers are on side right now at the leading edge, at the inside, what they call the inside edge, which is where the vast majority of trading is happening now. So it's showing me that there's been more longs entered since I entered the trade, but it's showing me at the moment that there's actually quite a lot of sellers on my side. So it's a pretty mixed bag, which is why we haven't gone anywhere. Yeah, so we've had a load of buyers, but there's quite a lot of selling pressure. We're accumulating. Yeah, so that's basically what they're telling me, and that will reset every time I enter into a position. It will also reset at the start of a new session, as will the footprint. This footprint will vanish at the New York Open, and it will start building again from scratch, because it works session by session. What happens in the Globex session has got nothing to do with what happens in New York. This area here is the large orders executed, and this can be fine-tuned. So I have two settings for the ES. I have the 1030, which shows me all contracts entered which are 10 or above. So these are large contracts. And then 30, it will highlight them so that I can see the large orders going through. I set it to 1030 when when I'm trading the Globex session, which is quiet. When it gets to New York, I set it to 30.50. So this will only show me contract orders which are 30 contracts or more in the market. So these are the bigger players. So I'm interested right now. Yeah, I've gone short, and the market is showing me that there's more buyers than sellers entered since I went short, and it's also showing me as a lot of big contracts are going long. So because I'm short in the market, there's been more buyers than sellers, and there's a lot of large contracts entering. Do you think I'm on the right side or the wrong side of the market now? Probably wrong. Yeah, there's a load of buyers coming in. There's a load of buying happened since I pressed the button, and price hasn't moved down. So what should I be doing with this trade right now? Getting out. Because I'm not on the right side of the market, am I? There's a load of buyers coming in. This is obviously tick strike, which you're familiar with. This basically gives me an audible insight into what's happening in the markets. So at the moment, I'm monitoring the Russell, the Dow, the ES, and the Nasdaq, and also the DAX. And over here, I've got the Nasdaq, the Dow, and the Russell, because these three indices are correlated to the S&P 500. So if this is flying up, this is flying up, this is flying up, and I've gone long, I'm happy. If I take a long position and suddenly the Nasdaq and the Dow dump, likelihood is the S&P is also going to dump. So these are used for confluence. So I can see where they are. So this white line in the middle is the midline. Yep. If price is below, at the moment, right now, we're bearish. If I'm short, I'm happy. If this pushes up here, when I'm in a short position on the ES, I know that there's buying pressure across all indices, and the likelihood is the ES will experience the same thing. So this gives me confidence as to, it's an overview of the entire market, the entire index. So this is the top 2,000 stocks, the Russell, the top 30 stocks, the Dow Industrial, and the Nasdaq, which is the top 100 tech stocks, and I'm trading the S&P, which is the top 500 US stocks. So they will all move similarly. You're also good for spotting divergence. So at the moment, the Dow's down, the Russell's down, the Nasdaq's up. The Nasdaq tends to lead a lot of the time because it's more volatile. So it's showing us we've got divergence at the moment. We've got one indice moving up, another two indices moving down. So the likelihood is these will possibly get dragged up. Either that or the Nasdaq will probably dump because the ES is also below the line. So it's just confluence. It just gives me an overview of the market. Up here, we've got, I'll answer your questions in a minute. I see the questions coming in. Up here, I have a swing chart, which basically gives me, let me zoom in. I can make this bigger actually for a minute. So the swing chart basically shows me what is going on right now. This is a 1 minute chart. So it shows me the swings in the market, and it gives me an idea of what direction I should be in. At the moment, we're sideways. But what I'm interested in is these areas here, these numbers. Okay, so at the open, 8 o'clock, this is the Frankfurt open. We opened and we put in, can't really see that one sec. We put in 11,000 contracts long. We moved up 64 ticks, yeah, from the open. Okay, then we pulled back on 2,600 volume, 24 ticks. Then we pushed up on 1.6 thousand volume, so 1,600 volume. Then we pulled back down on 1.5, pushed up on 5.6 and pulled back on 3.9. So the way that this is used is to give you a directional bias in the market. So if you see something like this, this is yesterday's New York session. This is what I traded yesterday. And I put a screenshot of this in the group yesterday. But if you see this happening, us pushing down on high volume, pulling back on low volume, and pushing down on high volume, you know that there are more sellers than buyers in the market. So we could only pull back on 31,000 volume, but we managed to push down on 67. So if the volume when we push up is lower than the volume we pushed down on, the likelihood is we will get another leg down. Yeah. When you see the volume pushing up on higher volume, so here, yeah, so we pushed down on 62,000 volume, we pushed up on 28, we pulled down on 20 and then pushed up on 29. So you can see that the volumes are different here. We've switched back the other way. So we've pushed up on high volume, we've pulled back on lower volume. That means we're probably going to get a new leg up. We pushed up on 29, we pulled back on 16. We pushed up on 24, then we had a big 83 put into the low. Yeah, so it's just giving you an indication of which side of the market you should be on. There are times you'll see this and it'll be obvious. And you'll be like, I do not want to be hitting the buy button here, because the market is short. We're doing 67,000 and 71,000 contracts short. We've only managed to do 31 and 21 long. Chances are we're going short. So that's basically what this is showing me. It's kind of like a zigzag. But it's a little bit, the tuning of it is a little bit different. So the colours just give you an indication of whether or not it was a bullish move or a bearish move. Yeah, so we pushed up on 11,000 contracts, we pulled down on 2.6, we pushed up on 1.6, so we made a new high. Yeah, but this is red because we made a new high on lower volume than we did when we went down. Yeah, and this bit here is the cumulative delta. A lot of people will be familiar with cumulative delta. It's basically just showing you on every minute whether there were more buyers or more sellers in the market. Yeah, so when I get into a trade, if I'm in a trade, well, what happened there? If I'm in a trade long, let's say I get in long here, for example. If I get in long and all of a sudden I see cumulative delta dropping like this, it worries me because I want to see buy volume. So every candle there was more buyers. Yeah, every minute there's more buyers in the market than sellers. So this is blue. So this is showing me it's going up, which is a good thing. If all of a sudden delta starts to go down, it's telling me there's more sellers coming in the market. So if I've entered along there, I'm going to be a bit worried here. A lot of people use this for divergence. So you get what's called delta divergence. So if you have delta, so we've got delta divergence here. Yeah. Yeah. So the market made a new low, right? But delta, i.e. the difference between buyers and sellers in the market, was pushing up from here to here. Delta divergence says go long. So delta can be used in two different ways. When you're in a trade, it gives you confidence to stay in the trade. Yeah, so if you see a load of sellers coming in, delta divergence going down, but you see the price ladder not moving, that's good because they're selling and selling and selling and selling. You can see it on the delta, but price isn't moving down. It means that the buyers are absorbing all of those sellers. And what you'll get in a minute is a big bullish delta move and a move up. Yeah, so it all slots together to give you an overview of where you should be going from a directional bias. And when you're in a trade, it switches used to, I need to monitor my trade. I'm looking for the market to be on my side. So I'm looking for, if I'm long, I'm looking for delta to be going up. I'm looking for large buy orders to be coming in. I'm looking for the difference between buyers and sellers since I entered my trade to be positive. And I'm looking for price to be moving up the ladder. If this is all positive, this is all buyers, this is all doing that, and the ladder is staying flat, it means that the sellers are absorbing every single one of these buyers. And eventually these buyers are going to give up, they're going to puke, they're going to stop out, and they're going to turn into sellers, and it's going to drive a move down. So it all goes together to give you an overview of exactly what is happening with order flow right now in the market. So you need everything, but you use it all at different times to tell you different things. So you see a load of buyers, yeah? So we've had this thing going green, 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 yeah? I don't know where it was when it started going green, but if it was here, for example, and we had a massive flurry of buyers, we've had all these massive buy orders come in and it's moved up 4 ticks, that tells me that this is not a strong buy move because we should have gone really high. So it's telling me there's a load of sellers in the market. These dots over here are large, what we call volume, I don't know what you call them, volume bubbles I would call them. But these are large orders. So when you get to an area like here, we're about to hit, we've got a load of buyers coming in the market. If we get a big bubble forming here, it means that there was a large volume of orders which have been absorbed. The colour of them shows you how many buyers there are versus how many sellers. So this one here, there's a few buyers, but the vast majority of it was sellers. You can tell by also clicking on these. If you click on it, it will tell you there was 71 sell contracts and 26 buy contracts. So we pushed up and there was a very large sell order came into the market. Yeah, all the way up here, there was a load of sells entered here, and we managed to pop through the top of it. Look at the size of that sell order that's just gone in there. There's an imbalance, what we call an imbalance. Yeah, so there's a big blob. That blob is 285 contracts short, 126 contracts long. Loads of sellers, way more sellers than buyers. But we've managed to push through that area. So everybody that sold there, that big guy that sold 280 odd contracts there, yeah, if this pushes up more than sort of 4 to 8 ticks, he's likely to go, nah, this is not right. I'm going to puke the trade. I'm going to exit the trade, which means he now needs to dump in 285 contracts long. He is to buy. If he's a seller, the next button he hits is the buy button to get out of those contracts. So if this pushes up to here, eventually this guy's going to go, nah, I've had enough. Get out. What does he do? He becomes a buyer. When he enters large buy-ins in the market moves up. So these give you an indication, not necessarily of where you need to be turning. They show you where there's action. We want to be in on the action because after a big action comes a big reaction. Yeah. So that's an overview of everything on the chart. This is just a 5-minute version of this without cumulative delta. I look at delta on the minute. But this is just giving me the 5-minute overview. Globex is choppy, but you look at this on other sessions, it just gives you a higher value. So this is the New York session here. You can see we're jumping up to 357,000 contracts, 145,000 contracts, etc. So just gives you an indication, sideways or up. This is yesterday. Yeah, you can't even see it because the drop was so big yesterday, but there you go. So open yesterday, we basically dumped 572,000 contracts before we had a pullback. So all I was doing yesterday was every time we broke out of a low, I sold it. I sold every low and I got every low until I didn't. Then I stopped. So it's useful, the M5, but it doesn't, Globex, it doesn't do anything. The Globex session is the morning session before New York. The London session, if you want to call it, I suppose. Asian and London combined. Right, so there's an overview. That's what everything does. So next time you see me trading it, you know what it all is. Jesse, I'm comparing in real time what I have on TS Trader, and my bid and ask contract numbers are a bit different. But the cumulative contracts since the start of the day are the same. You will get a lag. I mean, this is the CME. This is the Chicago Mercantile Exchange. You should see pretty much the same prices here. Really, it's the same data feed. Some big contracts here at the moment. We've got 156 there, and we've got 200 and something sitting down, 270 sitting down there. These large orders, price tends to get attracted towards large orders. The markets will move towards them because think of these like prey. Yeah, there's 154 contracts sitting here. It could be 3 big players. It could be 15 big players. When I say big players, 10 contract players. If you're trading 10 contracts, that's a decent size. So the market tends to get attracted to them because it wants to eat these orders. And depending on, think of it a bit like Pac-Man. Yeah, these are your power pills. Yeah, the market will always try to get towards these because it eats them and that powers the market up. When we get a big volume of contracts, we have a participant in the market or a number of participants in the market right now. They are either long or short. At the moment, I would say they're short. So if these guys have got enough behind them to keep selling at these levels, eventually everybody that's buying is going to see themselves tick, 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 and they will go, nah, not working. They'll get out of their positions and it will fuel a move that way. Or the people that have sold at these levels, these large numbers, will see this get bigger and bigger and bigger. They'll see more and more and more of this coming in. They'll see this remaining strong and they'll go, I don't like this sell position, I'm getting out. And they will puke out of their sells and pop. As it's happened, it's gone the other way. The sellers have won. We've got a massive imbalance here. Look, 548 contracts short, 156 contracts long. So all these guys that were buying went, no, can't do it. They turned their buy orders into sell orders and fueled a move to the downside. Yeah, so that's kind of how you read what's going on. It's all about trapped buyers and sellers and stop runs. So when you break out of a high like this, so I've got a buy pending order up at the highs here, there's a big volume there. So somebody stepped in with a very large contract up here, or a number of large contracts traded up here, and pushed the market back down again. So somebody doesn't want us to get through that level. They're going to defend that position. When we get back to that level, we'll see high volume coming in again, because whoever's sitting there short, if they're not out of their positions now, they want to be defending that. Think of it like a propulsion gap. Yeah, so that's where you'd see your lavender line on the chart. Or rather, that's where you'd see your lavender line on the chart. So they're going to want to defend that position. So what's going to happen is when we get to that position, we should see some big sellers coming in. Or if they've exited the market, we could well see it just fly through the market. And that's where you get your breakout. And breakouts tend to be a push, pullback, and what we call a head fake, or what they call a head fake, is where you push out the top and then you pull back. Yeah. And here's a head fake short. You push out the lows and then you pull back. And this right now, what we've got going on is a head fake long. So we've got a head there and we've pushed out. We've done a move to the upside and then we pull back. So the play on these trades is assuming that we are long bias. At the moment, we're pushing up on slightly less contracts than we pulled down on. So at the moment, we're range bound. We're not actually directionally biased at all. But if we were a long bias right now, which we're not, what I would expect to be doing is looking for an area down here to buy. Somewhere down here, I'll be looking to buy, because what I'm expecting to happen is them to head fake, drop, head fake, drop, head fake, drop. Yeah? What's that look like? It's market structure. It's always exactly the same stuff. It's market structure, but on a micro scale. Yeah, that's what we're looking for. So I'm looking for opportunities to get in long. Where should I be getting in long? Well, according to the volume profile, this at the moment here is kind of the weakest area. There's a big volume cluster there, and there's a fairly big-ish one there, not very big. So buyers will probably start stepping in here, looking to push it back up over there. If that fails, they'll probably start stepping in here. If that fails, they'll be thinking, we might well be going down. So as a buyer, I'd be looking to put a contract somewhere around there. Yeah. And if that fails, you could, if you want, a lot of people position trade moves with multiple contracts. You could get in down there and you could get in down there. So ahead of larger volume. So where you see contracting volume, contracting volume into a larger volume. Yeah. and here. There's a large volume node there, which we've just popped through. So you're getting there, looking to go long. We've also got a big order backing us up here, 256 contracts. So if I get in ahead of that, which is called front running a contract, I'm hoping that when I get in, this guy's going to step in and push the market up. Yeah, that might be a fake order. Might be what they call a spoof, where they pull the order just before you get to it, and the market goes. Think of it like this is a chair, right? And you're just about to sit down on this chair, and just before you sit down on the chair, someone pulls it out your way. What happens? You fall on the floor. That's the best analogy for that, I think. So a spoof is where they put orders in the market, and just before you reach it, they pull it out the way and go short, because they're actually short in the market. Remember I said market is attracted to these. They're areas of, I can get a load of volume on and something's going to happen here. We're going to get a bubble. Something's going to happen. There's going to be a large move after we get to that. So the market gets attracted to them. But if you pull that out the way when the market's on a run to it and everybody's starting to sell into it because they're thinking, oh, we've got to get down there, and that disappears, all these people that have were going to react there, and it tanks out the bottom. So you need to be aware of those and use them by quite often front running them, and assume that we're going to get a load of absorption there of sell orders, and then we'll pop back up again. Yeah. So what we're doing at the moment is rotate what's called a rotation. So we are rotating and building volume in this area. Yeah. So we're going to play around in this bit until we have got enough orders, short or long, for someone to dump some big contracts, light up tick strike, and either move us out in one direction or the other. So these are accumulation clusters. So quite often what price will do is it will rotate. So it didn't fill my contract there. It rotated down from here all the way through this volume until it found enough buyers to rotate all the way back up again. And it will do this 5, 7, 10 times. And eventually it will be, right, now we're going to go. And what you'll start to see is volume building one side or the other, and large contracts starting to come in. So this is where this helps. If you see this, every time we get down there, go blue. Every time we get down there, go blue. Every time we get down there, go blue. We know that there's people building buy positions, and it's unlikely they're going to let price get through. How much or how often do you use the heat map? Not very much, to be honest. I use it. I mainly use it for levels and for judging where to get in. So if I see, as we've had here, yeah, if I see a breakout, a head fake up, and then we pull back, I'm using this to see whereabouts. So think fibs is the easiest thing. Yeah, we pushed up. There's your move. Roughly a 50% fib retracement is going to be, funnily enough, there. Roughly a 61.8 retracement will be somewhere around there. We've got big contracts sitting there. So I'm looking basically for somewhere to get in on a pullback. So I will look at that really to see where we've just been, and I'll look for volume clusters. So this is why, you know, that one I've spotted here would be a good spot to get in. We've got a big one there, which is why I jumped in ahead of that. Yeah. So when we're pulling back, I'm looking for areas of volume that we've moved up through, because these guys that put all this volume in before we moved up are long. And the thing is, you've got to understand who's playing the game here. Yeah, we've got people like me and small market participants who are jumping in and jumping out with 8 to 16 ticks at a time. You've got institutions who are jumping in and jumping out with 1 tick, the market makers. And then you've got your longer term guys who are buying up levels and holding them for days, weeks, however long. So there's lots and lots of different participants in the market. So if somebody's got 15,000 contracts they need to put into the ES today, they're going to do it in 20s, 50s, 100s. They're just going to keep buying up. Every time it gets lower, they're going to buy it up. They're going to buy it up. They're going to buy it up. They're averaging into the market, waiting for the move. We don't know who any of these are. Yeah, I've done 10 contract trades. I've done 5 contract trades. So small guys can do big trades. If I'm doing a 5 contract trade, I'm only looking for 4 ticks. So a 5 contract trade would be so it's $100. So I'm just going to scratch that. So just banked $100 there. I've just realised you can't see the P&L, can you? For some reason. There we go. Okay. So if I'm going to take a 5 contract trade, I want to be long, and I only want to be going for 4 pips, 4 tick target. So I will probably put a contract in somewhere where I'm expecting price to bounce from. So if it pushes down to there, I would like to go long. So I'll put a contract higher, and I'll trail it down as we pull down until it gets filled, and then I'm looking literally for one of these. So as we're pulling down, I'm looking for a bounce, just a little bounce, just to get me that 4 tick. And this is typical market maker behavior, where you're in and out fast, banking. Yeah, 10 contracts, banked. 15 contracts, banked. That sort of movement. And you can do the same, exactly the same things as they do. So as we're pulling down, I'm expecting this to go long because we've head faked long. We're pulling back. So I'm entering a long order, and if this continues to go down, I'll just keep going down with it because I'm expecting at some point a load of buyers to step in and pop the market back up. So I want to be on the long side of the market. So I got in there, see I'm looking for 4 ticks. Quick $200 basically. Yeah. And I want it to happen fairly fast. If it doesn't happen quick, then I want to be getting out of the market. So since I got into this, we haven't really had much contract trade at all. We've had 30 odd contracts. We haven't really gone anywhere. So now we're ticking down. Ticking up. There's buyers on my side. A few more buy contracts gone in. No volume. I mean, I wouldn't normally take a trade here because obviously it's not moving. This is the sort of trade you would do during the New York session when this thing's moving a lot faster. So there's a lot of people doing that sort of contract in the market as well. And what you're basically doing is you're using them to get in and out of the market. So at the moment I'm looking at this thinking it's not going well. But I've got the NASDAQ on my side. I haven't got the Dow on my side. I haven't got the Russell on my side. We've got ticks coming in short across the board. Got sell volume coming in. This resets every 3 minutes. So these only last in here for 3 minutes. So I'm only seeing recent large volume coming in. So what I can do now is I can average into that order and go 10 contracts long and then reduce my target down. So now I'm just looking for another 4 tick bounce to the upside to get out on 10 contracts. And this is what a lot of the algorithms will be doing, is they'll be waiting for certain conditions to be met and certain order volumes to be met, and then they'll just be bouncing up and down in the market, just sort of grabbing very, very, very small moves. There we go. So I've got 5 of those filled there, and I've got 7 of those filled there. Go, I'm out. Yeah, so there's $187 in 2 minutes off of 10 contracts. So there's a lot of that sort of stuff going on. I personally don't do that because I find it too risky. But there's lots and lots of different people trading lots and lots of different ways. You've just got to be aware of what they're all doing. So the guy playing that type of trade, if it moves sort of 6 ticks against him, he's going to get out of that trade. So if he's entered 20, so I don't know, let's say that guy there, right? the 11 long. He bought at 27.50. So he bought there, and there was 11 contracts entered at 28.75. Yeah, there. So that was a typical 1, 2, 3, 4, 5 tick scalp. Yeah, 11 contracts long, 11 contracts exit. To get out, you've got to do short. Yeah, so there's an awful lot, and that's basically scalping. A lot of people are scalping 4 ticks, 8 ticks, and as I said yesterday, I think I can't remember who I was talking to, Franco, I think it was. One thing which is a good sort of drill, if you like, is to do a 16-16 drill, which is basically, where do you think the market's going to go? At the moment, I think the market's going to go long. So I'm going to get in with a long position, and I'm going to basically go for either a 16 tick target or a 16 tick loss, and give yourself a nice 16 tick move room to see what happens after you get into a position. So you got into a position, I'm going to give it 16 ticks breathing room that way, and I want to get out 16 ticks that way. If you do this drill 30 times a day, you will see what happens when you get to clusters, and you'll start to see areas where it's better to put an order and worse to put an order. With these footprints, with these volume profiles, you do not, and it's the same as any trading, you do not want to be taking trades in the middle of a range. You don't want to take a trade in the middle of a volume profile, because one of two things is going to happen. It's either going to break out the top of this volume profile and go for a run, or it's going to rotate the volume profile. So you want to be buying the low of the volume profile and selling the high of the volume profile, or buying the break of the volume profile and selling the break of the volume profile. You don't want to take a trade bang in the middle of the volume profile, because there's no clues anywhere here as to where price is going to go next. But down here, we know, because we can see it's happened. Yeah. All this here, this has all been traded here. So every time we get up to here, we tend to sell down. Every time we get down to here, we tend to buy up. At some point, though, someone is going to cause a break. The clues will come as the Nasdaq flies, the Dow flies, the Russell flies, this flies up, this turns blue, that lights up green, Delta starts to rise. You want to be long when that sort of condition happens. So you want to have an order up there ready to break when that happens, that condition happens. So you're the same as any trading, you're either range bound or you're trending. And identifying which of those market conditions you're in is key. And these drills will teach you that, just getting in and getting out. Yeah. So I've gone long, and you know, see what happens. Globex is hideously slow, but it's nice. This is the best training ground, I think, Globex, because you get to see the volume building. You get to see imbalances like this. We've got 444 people bought at that level, only 254 sold there. This is bullish here. This imbalance, it's a bullish imbalance. That's up, that's up, that's up. Delta's down though. So there's been quite a lot of selling, but Delta's down. Have we moved down? No. We're moving up. So this is Delta divergence. So there's all that. This is what I mean. It's a picture. There's no system. There's no strategy. There's no, if this does that, then do this. It's not mechanical. It's discretionary. I feel long at the minute because lots of stuff's telling me it looks a bit more long than short. Last move was a push out of the highs. We've pulled back. We've accumulated. We haven't managed to go low. This guy's massive order hasn't been executed. So I'm thinking long. Anything backing me up? Yes. No. No. So it's unsure. But you see, when you get in, yeah, it can drop against you by 6 ticks. Now it's pushing up 6 ticks. 6 ticks is like a decent amount of money. 6 ticks is like $80. Bank 40 now. Just get out. Take the 40. It's not working. It's not going my way. I'll take $65. See that? So I've done $352. I'm just not doing it. I'm hitting the button, don't I? I'm not thinking too much about this. I'm just getting in, I'm getting out. But giving yourself enough clues on your side to put the odds in your favour. So there's a lot of different strategies you can use as well, and most of them are based around tick moves. So for example, I have a tick, what I call a 16 stop runner. So I use this on breakouts a lot. So I would place this order up there, and what will happen is it will, I've got trail set on. That trails price basically. So if you have that button turned on. 16 stop runner up here. What will happen is when this order gets triggered, it will put a 16 tick stop on for me and no profit take. Because what you will find is when you break these levels, you will get a big strong move in your direction. You've heard me say in the live room a lot probably, I'm looking, when I've been scalping, I'm looking for a pop. When you get to this level and the guy that sold here, these 154 contracts, when you get 300 contracts hit that offer and they don't hold, it pops, because there's a load of guys like me sitting here at this level with long orders going, I'm getting out here, I'm going to push this higher. And as it pushes higher, people buy, which pushes it higher, which makes people buy, which pushes it higher, and that's why you get these big rallies to the upside. So I don't want to have a TP of 16 ticks. I've seen this move 30, 50, 70 ticks, 80. At New York Open, you can go 20 points out the top. So don't put a limit on it. But if I'm wrong, and it's not going to be a breakout, when we push, it very rarely comes back more than about 16 ticks before you get your next push. So it gives me the opportunity for them to push out the top, yeah, roll back, and then push again. So this is more than enough of a stop loss. And when you find, if you trigger, let me just trigger along with this one set. What you'll find is, I was just getting one. Yeah. You can then adjust this stop to put it somewhere that is more logical. So it will automatically place that 16 tick stop for you. But for me, if they rotate back down and they break this volume here, we've got less volume before we hit that. These three here should hold it, shouldn't they? So what I will probably do is just drag that up a little bit. Yeah, I'm going to sit behind this volume. So I'm expecting this guy to help us out and hold the market up. So I might as well sit 2 ticks. 2 ticks is $25. Why take $25 extra loss? If it breaks that level and this guy pukes, it's going to get me out down there anyway. I might as well get out there with a little bit less. So yeah. Trevor, you got to go. Okay, cool. I'm not far from finished anyway, so. Can we get a demo account and practice, and who do you recommend? There's no demo account for Jigsaw. If you want to use Jigsaw, you have to buy it. It's $500 odd, something like that. Demo accounts is data. So yeah, demo accounts are all over the place. Get a demo account with Top Step is probably the best thing. You get a 14-day trial. That gives you data included as well. And you can reset, I think, that. So but yeah. So anybody got any questions? Any other questions on it? As I say, strategy is very there's lots of different strategies, but they all revolve around watching for signs of the market starting to head in a direction and jumping in. So yeah, if you buy Jigsaw, do you know what I'll do? I will sign up with an affiliate account for Jigsaw, because quite often they give you a discount coupon to encourage sales. So I'll go and sign up as a Jigsaw affiliate today, and I'll see if I get a coupon code. And if I can, I'll pop it in the Telegram group. So yeah, I've got 87.50 profit, 112 buyers coming in. So do I want to get out of this position now? No, look at this. Loads of buyers coming in. Market's moving up. Delta's starting to tick up. Yeah, and this is why using a 16 tick stop and no TP is good. What's going to happen if it breaks this high? Boom, we're probably going to get a pop, aren't we? Do I want to get out here? No. If that pop's going to happen, I want to be up here taking $600-700 off the table. But what I can do is make sure I don't lose any money and cover my commissions. So I'll lock in $12.50 and let's see if we can get a rider, which is why I call this a runner, 16 stop runner, because if this goes, I'm going with it. I'm not taking it off. I've got a zero risk trade on and a potential to make an upside of $1,000 just because I got in. And there's two schools of thought, and I play these trades if you look at yesterday's trades I took, some of yesterday's trades, you'll see there's a massive difference in the trades that I took. So you see some of these, most of these are $200 scalps, $100 scalps, but then this was a runner, 575, two contract runner, 575, moved up 40 ticks, went against me 14 ticks, moved up 40 ticks. That one moves against me 31. That wasn't using a stop. I scaled into that contract 3 times. Some losers. There's some big ones in there. 450. Yeah. Look at the drawdown. MAE is drawdown. No drawdown. 39 ticks. Straight up. $450. One contract. 2 contracts. 325. Pulled against me. I don't know how I got that on 2 MFE, but I must have had those quite spread out. 650. There's just loads of contracts in there. There's a $1,000 one there. This is when I was. This would have been demo trading, because I wouldn't be trading this on the main account. So there's my profit. Look, $39,000 over the last week or so. Let's go back to today. You can't. No, you can't reset the demo. You give your phone number, so you can't do multiple tries. Oh, okay. Yeah, so go and do the top step one and do the trial. And then if you do the top step, I mean, it's up to you. I'm all for, if you're going to practice on an account. With Top Step, you get a practice account as well as the evaluation, or the combine as they call it. I never understood why they call it a combine, but the evaluation account, you get a practice account with it. So practice, then switch over to the combine and take some trades. If it's going well, keep taking the trades. If it's not going well, switch back to the practice. In the position tab, do they mix your demo and real trades? Yes, they do. Yeah, so you can split them out. You can go to there's a column you can add where you can select different. You can select accounts. So that 30 grand is not all. That's not all real. I'd love it to be. That 40 grand is not all real. That's demo and real mixed. But you can split it out. So depending on whether I've been demo trading or not, when I start a session, if I haven't been demo trading on the session, then obviously I will just filter back to that, because I need that. I'm concentrating on this. I want to know where I am on the day. This is excluding commission as well. They don't include commissions, so you need to take that off. I do roughly $100 to $150 in commission a day. So I always know I've got to take roughly $100. If I'm up to about $1,000, $2,000, I've got to take roughly $100 to $150 off. So that trade didn't work out. That runner just broke even, $12.50. Now we're pushing down. We've got a large contract here, so we could try front running this contract. So again, looking at the volume, we've got a bit of volume there. We've got a cluster. If you look at that volume there, yeah, all this volume here is lower than this lot. So realistically, might as well. I can't move my stop. Seems to have a platform malfunction. I can't cancel it either. Oh, got an error message. Hang on. I'm quite sure why I can't cancel that order. I can't change it either. I don't know what's going on there, but I can flatten it, I'm assuming. Yeah. So what I would have done there is move that stop up underneath there, because if that guy can't hold the market, or he's a spoof order, we're flying through. So I'm not going to take a loss there. I'll take a loss there, because if we break this level, we're going to break the lot. So instead of using a 16 tick stop, I'll use probably a 12 or a 10 or something like that. But there's a lot of sell orders coming in at the minute. Divergence is good though. Delta's good. We're positive across all the markets. No volume coming in at the minute though, really. So you see over here, it's a triple bottom. So if you look at that on a chart, obviously you'd see candlesticks. These would be obviously the wicks of the candlesticks, but you can't see inside what's going on with the candlesticks. That's the big advantage of order flow, and seeing what's happening after you hit that button for me is key. Because when I go long, as soon as you go long, if this thing just stays red and these start moving down, and I can see that there's more selling market orders coming in than there are buying market orders coming in, and I see large guys getting involved short when I'm long, you can't tell any of that from a candlestick. All a candlestick shows you is the open, high, low and close. That's all you get. No information whatsoever about what is actually happening under the hood. This is a really slow session today. Globex is normally a little bit more exciting than this. Not a lot, but a little bit more. The reason I like the Globex as well, I mean, if you look at this volume profile at the moment, we've traded from 33 down to 23.50, so we got a 10 point range. Really, we're in today. We've traded out of it a little bit to the bottom, a little bit to the top, but vast majority of it is a 10 point range, isn't it? So if you're using a 16 tick stop, you could quite easily scale in to multiple positions. So take a second position there, and assume that we are just going to rotate this volume cluster for a while. So if we push down to here, I'm going to get in ahead of this volume, and assume that we're going to rotate up another 5 or 10 ticks. And what's going to happen is my entry price is going to come down to here, and I'll be able to get out there with $100 instead of getting out there with a flat. Worst case scenario is I might lose another 67.50 because when I get in there, I'm going to drag the stop from there all the way back up to there, so I'll get out with both my contracts there. But rather than taking a loss on it, I'll take a rotation. I'll take a small profit off a rotation. And that's why you see a lot of my trades are $100, $200, because all I'm looking for is 10. If I can do this 10 times a day, yeah, if I could drag that out of the market 10 times a day, that's $1,000 a day. It's 20 grand a month. How easy is it? I've done 400 and right now I'm sitting here, I'm talking to you, demonstrating the platform, not even really concentrating. I've done $467 in profit. It's not hard when you understand what the guys are doing. What are the market participants doing? At the moment, there's no big guys playing in the market. But the small guys are on my side. Yeah. So there you go. Flatten that order. $87 or $75. It's $500 since 8:54, 9:45. It's less than an hour. But you sit here and do this 10 times. You will know when you need to be getting in, when you need to be getting out. I'm happy to get in again down here because we're rotating this cluster at the minute. But I'm more than happy to get in up there. In fact, that's also a good trade to take. So we've got 88 contracts, not a lot of contracts sitting there. We've got 117 contracts sitting up there. Right, so if we break that high, likelihood is we're going to at least get I'm visualizing on the chart here, we're at least going to get a head fake up to here. Probably get a volume cluster build there and a pullback. This will become the new head fake move and a pullback and then a break. The other option we've got is if we break this cluster and run for the highs and absorb all of this with buyers, we get a pop out the top. I'm now 2 contracts long on approximately 1,000 to 1,500 profit if we get a decent 20 tick move out the top. That's me done for the day. 1 trade. Just got to wait and be patient. Noob question. There's no noob questions until it's been asked twice. When a contract is exchanged at a certain price, how can we determine if it goes in the seller's column or the buyer's? If a contract is exchanged at a certain price. Right, so a contract, you don't get a contract exchanged at one price. So you've got what's called the spread. So it's a bit difficult when the market's moving to show you this. I need a slower market. Hang on a minute, let me just open a treasuries market. Let's go with September 10-year note. Let's try that. Yeah, that's better. So this is a much thicker market. This is the 10-year bond. Just move the ticks out of the way. Move that out of the way. So you can see here, yeah, you don't exchange a contract at one level. Okay, so there's 320 buyers sitting on the bid here, and there's 22 sellers. Oh, it's just ticked up. Typical. we got a lot less sellers than buyers at the minute. This is still ticking up. Is there a thicker market? This should be all right. There we go. Right, so we've got 288, 400 odd there and there. So the thing I'm saying is, right, we've got this level here and that level there, right? We don't make, we don't use the one level. You're playing a diagonal, yeah? The bid is here, the offer is there. So for a transaction to take place in the market, either these guys here, the sellers, have to step down and accept this guy's price, or this guy has to step up and accept that price. So I can either sell at 45s or buy at 50s. Okay? So you're not contracting at one price. So when I step up from here to there to make a purchase, 185 appears in that column. If the guy here at 356 steps down to make a purchase there, a sell contract happens at that column where it says 120. So a sell will happen here and a buy will happen there at one of those two prices. There's not one price, there's a spread. Yeah. So you're either hitting the offer. So if you want to buy now, you need to step up. So you're saying, I'm happy, I want to buy at this price. If nobody over here goes, yeah, all right, I'll sit here in the queue. I'm on demo, so I can take this. I will sit here in the queue, right? I am 527th or 385th in the queue now, right, for wanting to buy at this price. If I sit here for half an hour and don't get filled, I've got two options. Sit here for another half an hour and wait for one of these guys to go, all right, then I'll come down and take your order. Or I have to do what's called hitting the offer, which is I go, I'm going to step up and I want to buy at that price. So I hit the button here, I'm instantly in. It's an instant fill because what I've done is I've taken one of this guy's contracts away. So he got to sell at the price he wanted. So you've always got a one tick spread minimum. Some markets, like here, for example, you can see we've got a bigger spread at the moment on the NASDAQ because it's a really thin market. Look, there's some levels where there's no contracts trading. Yeah. So these are gaps. You'll see that on very thin markets at very thin times of year. There's a gap there, look, on the Russell. We're trading at 139, but the sells are trading at 139.2. There was nobody trading at 39.1 there. There's nobody is interested in either way. So you can jump up, or rather jump down, whatever you want to do. But yeah, so on a thick market, like the treasuries and the bonds, and there's lots of markets which are thick. And by a thick market, yeah, you compare the two. Yeah, we're sitting here with 400 to 1,000 contracts. We are over here. We've got 2 contracts, 3 contracts, 1 contract. Thin markets move like that, up and down. No, I don't trade the NASDAQ. I can't trade the NASDAQ. This thing, you watch this thing at the New York Open, it will fly up and down like you won't believe. And so will the ES to a certain extent. This thing at the New York Open will go like that, whereas the NASDAQ would have gone like that. Yeah, because to move up here, if I want to move up now, if I as a buyer want this price to go higher, I've got to put 230 contracts. I've got to go long 230 contracts up there to eat that lot. That lot will disappear, price will tick up. When all the contracts have gone this side, yeah, so if I wanted to now move price from where we are here all the way up to 090, I have got to go long 6,835 contracts. I've got to go 6,835 long here, and I will just go and eat the whole lot. But we don't know how many people are sitting, or how many algorithms are sitting here with 200,000 contracts short. And that's what we call an iceberg order. So what you see here is not the full intent. This is an intent column. Yeah, the ladder is intent. This is actual transacted marketplace orders. This is intent. So I am intending at this level to go short 1,005 contracts. If we get there, this guy could just go, actually no I won't, I'll pull it. He'll pull that 1,005 contracts out. Because they're not orders, are they? These are pending orders. Not executed. No guarantee they are ever going to get executed. But he could be sitting there with 1,000 contracts now, and he could also be sitting there with 25,000 contracts in his pocket. And every time 1,000 contracts disappears, he adds another 1,000. Every time those 1,000 disappear, he adds another 1,000. Every time they disappear, he adds another 1,000. Until he's got rid of his 25,000 contracts. That's what is called an iceberg order. They don't show their entire hand at once. They show part of their hand. This is what this is. Yeah? You get, you see 1,000 contracts in the market, and then at that level, you suddenly get 16,000 contracts traded. That's an iceberg. Yeah? The guy doesn't want it to go any higher. And he's going to make sure it doesn't go any higher, because he'll just keep adding shorts. You can buy as much as you like, guys. I'm going to add short after short after short after short. Eventually, you guys are going to go, oh, we're not going up. I better get out. To get out, what have you got to do? Hit the sell button. Every single one of those contracts that he has sold, you are now going to sell back to him at a worse price. Puking, they call it. Not a nice term, but it's getting out. You're stopping out. You're going, I can't win, so I'm going to take a loss. And what does this guy get then? A few ticks down, a scalp. And that's what the market makers are doing. They're sitting there, adding contracts, taking a tick, pushing down, adding tick, adding tick, adding tick. Which is why we are interested in large orders. If we see a level that they, like here, we got, these are at different levels, but let's say, for example, these all said 29.50. If we see someone hitting 29.50 sell, 29.50 sell, 29.50 sell, and that happens 5 or 6 times, someone does not want to go through 29.50, do they? So should we get on board with that guy? Probably, yeah. So I'll sell at 29.50. Likelihood is we're going to go down. But we're talking much bigger orders, which is why I have 2 levels. So when the US market opens, I want to see size from 10 upwards, and any orders over 30, I want you to highlight for me. But when we open in New York, I only want to see contracts of 30 contracts or higher, or 50 I want you to highlight for me. And we'll get hundreds in there. And depending on volatility, you'll adjust this. So in a massively volatile market where we got loads of volume coming in, we might want to use 50 and 100. But that will change. So you just change along with it. So at the moment we're just stuck in this range. So this is just the market, you know, algos buying and selling and buying and selling. Got a few sellers stepping in on the ES at the minute. All the markets are down. But you know, we're not going anywhere, are we? So my orders I've got in the market here are designed to with the assumption that when we get down to, you know, there's roughly, well, there's our point of control. So when we're down in, this is why they call it the value area low and the value area high. So assuming we are just going to spend the entire morning rotating, range bound, I'm going to buy somewhere down at the value area low, and I'm going to sell somewhere up at the value area high. If we break out above the value area high, there's a chance we might get a breakout. If we break out above the high of the session and we get through this massive bulk of contracts that were placed up there, we're probably going to get a pop. So my plan right now is buy with the assumption we're going to rotate up, take out $100. If we push hard and I see this go green, that fly up, everybody else go long, delta push, I might not take $100 and see if we can get a second contract on a break. By the time we get up to there, I'll be roughly $250 in profit. So entering that contract brings me to an average around the point of control, so I can move my stop up to break even with 2 contracts long and the opportunity to make $1,000, $2,000. If we break and get the pop in one go and we get a spike, I've got potential to make $2,000 to $3,000 on one move, and that's it. I'm done for the day. I don't know what's going to happen. That's my plan. 90% sure we're just going to rotate because that's what we're doing. We've got no news events at the moment, so okay. So you decide to become an instant market maker. Become an instant market order if you step up or step down. Yeah. So we're talking about when we were looking at the treasury. Yeah. So that's what's going to happen. Why have I got an open P&L? Oh, I opened that treasury order, didn't I? Forgot about that. What was that on ZN? So I got that 10-year note order on. So right here, right now, you can see what we've been doing today on this market. So at the minute, and this is a really slow market, if you want to practice in slow motion and see what happens, what happens when you step up and step down, ZN, any of the 10-year note, the 5-year note, the 2-year note, any of those markets are good for practice. But there's your point of control, largest volume today. There's your value area high, your value area low. This is really slow. This has ticked down 4 ticks against me. We've got a low volume cluster there, and the vast majority of today's action is happening here, isn't it? So what I would be happy to do here is place a buy there, assuming that what we're going to do is we're going to just rotate down to here, and then we'll probably go back up 3 or 4 ticks. Going up 3 or 4 ticks is worth about $100, and it's so slow, so slow. I'll leave that. I don't need the profile because it's not going to help me. So yeah, so I'll take a little one long there. I was going up again anyway, so I might be able to just get flat on this. I'll leave that there for a minute. So we pushed down. Didn't quite get my order look. Let me just make that thicker and change that to a red so we can see it a bit better. So we pushed down to here. Look. 1 tick away. And what have we done? Rotated. I was 1 tick out on the volume. Missed it. But that was worth $150 if I'd have got ticked in on that. I didn't. Now we've rotated back up to there. Got some buying coming in, so we might break this high. So we've got to break through all this cluster. Yeah, and as we get to there, it's getting thinner and thinner and thinner. We know there's less people interested in holding the price down. So what we're looking for is an acceleration out the top if there's a load of buying pressure. Breakout. When you scalp on your real account during normal London session, for example today, would you stay away from that range or still confident enough to get some ticks in your favour? Yeah, I still trade this range. If I see this established and no volume coming through and we're not doing anything, we're just seeing the odd 10s and 20s popping in, the market will likely continue to do it. But I'll be ready. I mean, this isn't on the account, but this is what I would set up. This type of setup. Yeah, this when it goes, when this high breaks, because we've had such a volume here, and this is the thing we don't really know. We can see what's been transacted here. Yeah, you can see how many buyers and sellers there are. At the moment, there's 260 less buy orders executed in this entire thing. So we are ever so slightly sell biased at the minute. If this changes to a positive bias, you know when I say in the bootcamp, the market, what the market makers do is they sit through Asia and accumulate. They then pass it over to the guy in London. The guy in London says, what's your book looking like? Are you long or short? He goes, right, well, I've built up orders. We're long 1 million. He goes, okay, I'll take it long. So then he basically does a load of buy orders, takes it long. They make a load of money. This number here is our equivalent to that. At the market, at the moment, during this accumulation, this rotation is 250 short on longs. So we know this book is balanced short at the moment. But this is a tiny number. This is even though this is balanced short, they'll more than likely just do that and then rotate back up again. Yeah. If this was balanced really long, I would say they're ready to make a move. But at the moment, I would class that as pretty much nothing. It's neutral. But when you, this is the difficult part, is identifying what market condition we're in. It's exactly the same as range and trend. A range is only a range until it breaks into a trend. Unfortunately, with most traders, when they notice a range, they notice it when it's about to break, and what they do is they play the short just as the break happens, and they go, "Oh, range-bound trading doesn't work," because by definition, you don't identify a range until a range has formed. By then, the range is ready to break into a trend. So that's why it doesn't work. I've identified a range. So for me, the best play at the moment is to keep rotating that range until it doesn't work. Take 100, take 100, take 100, take 100, lose 100. Okay, range is broken. But I'll have a pending order like this one ready to go, so that when a sell order here fails by breaking out, I get in long and take advantage of the breakout, which is why your P&L has red in it. These are the best days. It could do this all day long as far as I'm concerned, and if it can do this and I can pull $1,000 out of it, I'm done. It'll take hours, but if you can do it, it's brilliant. And I've often sat here in the mornings with $1,000 balance, looked at it, and I've taken 16, 17 trades, and it's painful and horrible and hideous, but it's a way of making money. It's just not very nice. So selling up here, and this is where this trail comes in really nicely. So if I want to trail now, I'll go, let's say, assume we're going to trade back down to these lows. So I'll put a short order in there. Because there's no volume, there's nothing going on. If it pushes up to the highs of this range, yeah, my sell's going to get dragged up with it. So when they're ready to rotate back down, I'll get in as they rotate down, and I'll get in down here somewhere. We'll try it and see what happens. So it's being dragged up. As we're ticking up, I'm ticking up with it by 4 ticks. And then we'll get in. And again, when you identify these, if you want to get aggressive, don't get in with 1 contract. Get in with 3 contracts. And take 300 out of the market at a time. If you can do that 3 times in a day, in a Globex session, you're done. $900, 3 trades. You could be done by 10:30 in the morning, 10. But sometimes you get volatile Globex sessions where it goes, it goes crazy. So there's a trying to find a decent. So there's not a bad Globex. There's a good Globex. Look. Yeah, that Globex session, we didn't range bound, weren't range bound, were we? We trended down, big style. You get those. See, you've got to identify. You can't assume because we're in the doldrums in Globex where there's no volume. Because don't forget, we're trading the US top 500 US stocks when the US stock market is shut. That's why this is quiet. So yeah, basically, you know, that's what we're doing. It's quiet, so therefore we're trading mainly ranges. But it will have days where you've had some earnings overnight and they will enter trades short. People in London are still trading the US stock market. So we're still trailing up, look, waiting. Now, if we break out of over here, I might think, if we break this level and get above this big volume, this is the biggest volume at the top of this cluster here. If we break out over here, I'm thinking, right, okay, this is getting close to making a new high on the day. So I might want to dump this order because I'm not too sure now about going short if we're breaking above this volume. But if this now ticks down from up here, good chance we're just going to rotate around the point of control. There you go, it got me in. So it ticked up quickly and then jumped down. Look, $25, $37.50. So I'm watching now. Since I've got in, we're massively bear oriented with sell orders. We haven't had any. There's one sell order coming at 13, but these are all below midline. Delta is negative. Happy to stay in the trade at the minute. We've got no signs of buying from tick strike. Nothing's happening. But I'm watching for signs of being wrong on the order. Same thing's happening on the note over here. Look. Just not going anywhere. It's rotating this area, so I shouldn't have taken. I mean, that was that was to show you, to take a trade to show you what happens about stepping up and stepping down. But you would never take a long above the point of control like that, because you want to take longs down here and shorts up there, like that additional order. If we can get down there, I'll get in long, and then I've only got to go up 3 ticks and I'm out with a profit. So $50. We had a bit of selling on the DAX then. The reason I have the DAX up is the Frankfurt exchange is open, trading German stocks. So anybody that is sector buying or sector selling will be executing a lot of trades on the DAX across sectors. And obviously they buy in bulk. So if they're selling aerospace, they will sell aerospace across Dow companies, Russell companies, ES companies, as well as DAX, but the volume goes in there, and you find that the ticks up and down on this will be precursor to these ones moving as well. So that's why I have the DAX there as well for trading futures in Globex, because it's a good indicator of what could potentially be just about to happen on these. So if you see this thing light up like a Christmas tree red, go minus 15, and these guys don't move, normally you will see a downtick start. You see at the moment, Nasdaq's really down. We're starting to push up a little bit. Pushing up a little bit. But we're all sell orders at the minute. Delta's still down. Happy in my short. But the key here is not to get too greedy. At the moment, we're kind of long bias. So I'm short. So really just watching what's happening. So another 12 contracts coming short there. We've got a bit of an imbalance here. 420 contracts short, 300 long. Again, it's good. But at any time, this could just pop. So if you don't get to where you want to be within a few minutes, you kind of just think, well, it's not really working, is it? I'll just take $50. I'll take $70. I'll take whatever I've got and go, and then get in again. But this is a really slow day as well. Still got nothing but sellers. Nasdaq's pushing down. Sellers coming in on the Nasdaq, more on the ES. But we're not making any headway. It's just not enough volume at the minute. There we go, we're off now. Right, so we've got selling coming in. We've got negative delta, but price is ticking up, which isn't a great sign. So what I might do is just cover it, just in case we get a pop. So worst case scenario, I'm just going to bag $12 and cover my commissions. Yeah. So if you're looking at the M5 chart on the S&P now, and it's looking horrible, now you know why. There's no volume in the market. No one's trading. So you're getting algorithmic moves. And they're just taking stops, taking stops, taking stops, taking stops. And these are the head fakes. So when I see a head fake, I want to be getting in, assuming we're going to go somewhere. If we don't go somewhere, I'll get in again and get out. Or I will just enter at the low here. But you know where the best places to get in are, because you can see where the volume is being conducted. You can see where not to get in. I mean, look at the Nasdaq's volume profile. It's just awful. It's just there's no entry here. If I was trading the Nasdaq now, I would not have taken a trade. I'd be interested up here in shorting. I'd be interested in longing all the way down here at the minute. But it's a horrible, horrible profile. Yeah. Somewhere up here you want to be selling on the Dow. Somewhere down here you want to be buying on the Dow at the moment. But at any moment, someone can step in with a few hundred contracts and move this thing multiple ticks in one direction very, 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 very quickly. Because you can see how it's not going to take a lot, is it, to move this market? We've got like 6, 13, 23, 39 contracts. If I enter 50 contracts, I've eaten 3 levels, 3 pips. I've made 3 ticks going short 50 contracts now. If you're a market maker and you've got the margin to do it. And this is where the margin comes in, yeah? $550 for one contract. So if you want to go 50 contracts short, you need a minimum balance in your futures account of $27,500 to enter a 50 contract short. Which is why people go funded, because to actually put any size in that you can do anything with and make some serious money out of scalping ticks, which is what the market makers do. I'm just going to shut this because it's just not going anywhere, is it? Might as well just take 60 quid. If you want to get in with a decent volume, you've got to have a decent amount of money behind you to do that. So I'll enter the longs back in. and I'll buy again if we get down there. So the note I've got in on that second contract down here. So my average is now at the point of control. So I need a 3 tick move to the upside to get me out flat, a 4 tick move to get me out with $50. This is a good example of actually the contracts as well. You can see the pulling of contracts. So they've pulled 32 contracts at this level. They've pulled 36 contracts at that level. They're adding 59 contracts in the middle there. So you can see the pulling of contracts. So they're pulling shorts and adding to longs. This thing's going to tick up. So we should see this tick up to 25s in a second. Actually, we've got 368 contracts to get through, but this is showing that they're pulling contracts and adding 130 contracts being added here. A lot of people adding contracts. So if we keep adding contracts from there and pulling contracts from here, it will have no choice but to tick up. If that continues, pulled 150 contracts. So now we're adding less contracts. So it looks bullish. Tick down. So we've only got a big order contract. I can't see the contracts because this is obviously the ES. I can't see what was added there. But somebody dumped a load of contracts on that. See, now we've pulled 244 contracts out on the bid. So it ticked down because all these hundreds of contracts sitting there, someone just went, nah, not having it. If you pull the rug out from under scene one, they're going to fall over. That's the chair. So someone just pulled the chair out of the way. So it ticked down. Now someone's putting the chair out above 263. We tick up. 400 contracts short being pulled. 300 being added. 500 pulled. 350 added. Tick up. Yeah. Not enough contracts here. If we move these 500 contacts out the way, these guys have got to step up to there to get their order on. Because there's nothing to do there. That's how it ticks up and ticks down. You can see it much better in these markets. A lot of people say to train on these markets, on the bonds, because they're so slow. You can actually see it happening a lot easier. We're pulling longs at the minute. If we start adding a large amount of sells and pulling longs, we'll tick down. If that continues to do that, we'll tick down. So if you want to make one tick out the market, you watch for that condition and you wait. And you've got to try and get in ahead there. You see we just ticked. Trading down there, there's getting very thin on the buy side. They're probably going to step out the way, and then if I want to sell, I've got to sell to these guys, which means we've got to tick down to start selling to those guys there. Just flicking. So we've gone. We're still pulling buy orders. You see, it's so slow. Good learning instrument that. I've never really traded it myself, but so again, rotating down. I can't remember where I got out. I got out here or here, didn't I? So we're down another couple of ticks. So again, if we rotate down to there, where did I get it? I missed it last time. So it's there. So I'm just going to move up. So that's where I'm at 33 in the queue down here. So I should get filled on that. So this is where we got to last time. It missed me by 1 tick before it pushed back up to the highs. So this time I'm going to jump in there. In fact, might jump in on that volume. We've got this guy backing us up down here still. But these rotations are taking ages, aren't they? Do you also look at time of day? For example, current lunchtime is less interesting. Be looking for setups. So you'll notice somewhere the Frankfurt Open is where we get. It's the same as any open. The Frankfurt Open is where you get a load of volume, and that volume tends to last anything from half an hour to an hour and a half, depending on whether we're going to trend or we're going to range or rotate. New York Open obviously goes crazy, absolutely crazy. But around about half an hour to an hour before the New York Open, you also get a large amount of volume. So trading from 8 until 9:30 is when you're going to get the most movement. We are trading the doldrums from 10 o'clock to 12 o'clock. It's usually pretty slow, unless it's a trend day, but even then it's still slow, but it's easy to trade. So yeah, 8 until 9:30 is busy. And then obviously from somewhere around 1:30 in the afternoon UK time, an hour before the New York Open, which is 2:30 UK, it tends to start to pick up at some point, but it's very erratic. It will just suddenly go, right, we're off, and you'll suddenly see it start to move. Sometimes it happens, sometimes it doesn't. But you can't really tell. So we're not moving on this note. But you see the range we've had here on this thing, and how long it's taking to go anywhere. It's an absolute slug. So if you just want to watch what happens, because this thing you can't see. I mean, you know, the pulling of the orders, you just don't see it here. And I don't even have it on the other instruments because it's just no point. Nasdaq moves, so I mean we're talking 1-2 contracts a level on the Nasdaq at the moment. This will fatten out to 20s and 30s, but at the moment you can't see it. You can't see any movement. So a few buyers just stepped in. Yeah, so loads of people sold. Loads of people sold. We ticked up. All these sellers right now here at 28 and 28.25. Right now it's ticking down. I was just about to say, before that big order came in, these guys selling at 28, yeah, it ticked up to here, 29s, and they were in a sell order here, and immediately when they entered ticked up. Do you think they were feeling comfortable or happy? Uncomfortable, weren't they? So they were thinking, all right, okay, this isn't working. As soon as I got into this, it's moved up. They're thinking about getting out of their trades, which means they need to become buyers. So that's an example of when they puke. You get in and you go, it's gone the wrong way. See, now it's pushed down and somebody's added to the order here. So at the moment, sellers are in control. But what we don't know is how many ticks are these guys looking for. If they're looking to get out 4 or 5 ticks, we're going to get down to there. And then we're going to stop, aren't we? See where all the volume's happening at the minute is here. All the sellers are selling in this range. But they probably only want 3 or 4 ticks. They'll be out. And then we'll see a load of buying come in around the lows here, which will make people buy, which will force us to rotate back up. Supply and demand, greed and fear. That's all it is. I sell, it moves up. I get trapped, I get scared, I get out, I become a buyer, which makes the market move up. It's not going to get me in, is it? So a few more sellers coming in. No more big orders coming in though. One more coming at 14. Okay, so I'm in, long. Good selling coming in. Just move this over there for a minute. Okay, so we're going to see what happens when we get to this 263. Loads of selling. Big buy order. We're adding to this order. Look, that 263. Right, so they've just run him over basically. So probability is we're going to stop out on this. Yeah, 123 big order just went in there. So this is a short. Okay, so we've got big delta to the downside, all other markets pushing down. We're pushing down here on just under 3,000 contracts at the moment, but we're stalling. So massive selling, but we're not making any progress down, which tells me that buyers are absorbing all of those sellers. So you've got two options here. You can either take that loss, or you can try and get out, assuming that we're going to rotate, which I've just done there. So adding another contract brings my average down. So I can try and escape that position by adding another contract, and I'll take probably a $50 to $70 loss on that second contract. So you can either try and do that, or you can just take the one hit. So now we've moved out to the downside. Potentially, this could be a head fake, and we're looking now for a pullback to go short. So we'll see what happens with all the other markets. We'll see what happens with Delta. We'll see whether we continue to get sellers coming through. This lights up. So now I'll be looking for pullbacks into this area here to go for short positions. So we're just flipping basically the other way in the market. I'm just going to get out of this 10-year note, because 30-year note, because it's not going anywhere. There we go, flat. Gone. Okay, so there you go. So big volume cluster. So typically when you see that, you tend to find you get an initial pullback off of it as well. So again, something you can try is a quick scalp on that. So you'd have something like an 8-tick stop, 8-tick target. So what I'm looking for is for all these buyers, when we start to tick up, to add into their positions to push higher. Everybody that's shorted there is going to get out of their positions when they see it pushing up, which makes them buyers. And then you get this quick flurry back up to there. So you get a quick scalp up into wherever the last lot of volume was, and exit up there and get out below that volume. Doesn't tend to work as well in Globex, because you in the ES in New York you get a much faster move. So when it trails down, you're out very, very quick. I think I put one in the Telegram group. I've had trades, literally it doesn't register a second. You're in, you're out, and you haven't even registered a second. That goes that quick. So another buy order come in there, big one, 47. Sold it immediately at 30. At 25. So one point, boom, run over. That's a stop loss triggering. Yeah, so that guy had a 4-tick stop. He would have been executed most of his order at that level, and he probably would have got out the other 17 contracts at either there or there. One of those two would also include the rest of his contract. I didn't put a stop on that. That's the one. So small scalp. So looking for that to trail down and then pop. If it doesn't, then I don't want to be in it. There's a lot of selling coming in. But if it does, I'm just going to pop out with 8 tick target. I don't actually hold out too much hope for this trade, to be honest, because everything is selling off very hard. This is the other thing Delta's good for, shifting momentum. So you want to see this when you're taking breakouts. You want to see the market on your side when you take a breakout. So we've seen a big shift in Delta, lots and lots of selling. Everybody that's trying to buy it, like me there, getting run over, getting out their orders, adding fuel to the fire basically. So we're heading down for a session low. So I would now, we've pushed down on 4.9, well 5,000 contracts. We pushed up last on 4,000 contracts. You see this line's gone red. So we are now officially looking for shorts. Yeah, so I'm looking for either breaks of momentum down, or more likely I'm looking for pullbacks into these sorts of areas to get short positions on. So you can start sprinkling sell orders without trails. Start sprinkling sell orders for where you think we're going to pull back to. So the obvious place is before that volume. Yeah, so looking for pullback into there to get short, and then you'll get out somewhere down here. Or as this pulls up slightly into this value area low here, I will then start entering sells under the breaks, which is similar to what we had at the top there, yeah? So positive delta, lots of buyers, we're starting to move up. So we're either going to get enough strength to push up that I can get into a short after a big push. After a big push, you'll get people pushing back down again. So everybody that's made this breakout happen, these guys, these sellers here, all these big volume that came in, that pushed price down, they're going to start adding into their positions to continue that move. If we don't get up to there and they are overwhelming, then I will get in down here and take a break to the downside. I just realised I don't want to be in with that. Too late. I didn't want that stop on. Just going to remove that. That was too tight. 8 ticks. There's a with the ES. There's a kind of, you can call it a rumor, a kind of thought process that all ES traders use 8 ticks. So the vast majority of traders using 8 ticks makes it a really obvious target for 8 tick pullbacks, which is why a lot of the time on the ES you'll see the moves being 8 to 10 ticks, because the assumption is everybody's got an 8 tick target. So if it moves 8 ticks against you, you bail out, become a buyer, which pushes it up a couple of extra ticks, and then all the sellers start eating your orders and dropping it back down again, which is why I don't like 8 tick targets. 8 tick stops. I like 8 tick targets, definitely, but I don't like 8 tick stops, which is why I tend to use either no stop in the Globex session, because I can scale into a position, or use 16. Other things you can do are things like 5 contract scale outs. Just making sure I'm definitely on the demo. I don't like trading 5 contracts. I prefer to scale into 5 contracts. If this pushes against me by a couple of $100, and I've got conviction that we're short, I'll add in up here, because I know 90% of the time I'll be able to get out, and I can take another $70, $80 loss if I'm wrong. But a 5 tick contract would be where you will enter 5 contracts short and scale out. That's not set up right. That's the wrong one. Hang on a sec. Yeah, so basically what that should have been. Not quite sure why it didn't. But entering 5 contracts. Take 2 of them off after 4 ticks, take another one off after 8 ticks, take another one off after 12 ticks, and let one run. So you're entering 5 contracts in one direction, and as price moves, you scale out in small parts. So you take in those runners, but you're taking larger trades. And a lot of people do that because if you get 2 or 3 good trades in a row, that's it, you're done for the day. You just don't have to worry about stay in the market for a long time like I am at the minute. But it's much more risky. You can see now, look, each tick now is costing me $75 with 5 contracts on. That's why I don't like trading 5 contracts. It's too much. Unless you've got a very, very big account and a very big risk tolerance. I don't mind scaling into 5 contracts and take, happy to take $1,000 a drawdown if I can see the market going well, but I wouldn't want to get in with 5 contracts. But the rewards, obviously, are vast. $1,000 easy on a short. But equally, a 16 tick move against you is going to cost you $1,500. Not much fun, is it? It's fun if it goes your way. See what this one does, and then I'll call it a day. See how it's gone quiet now. We've had a lot of buying in the last 3 minutes. That is dominated by blue. Tons of blue there, but you look at how much we're moving up on Delta. Yeah, we're not really making any headway, are we? So we've been buying up at 21.50 here. We made some buys at 23s as well and 23.25s. So we've bought up here. 22.50s, 22, 21.25. So they've been buying this range hard. Are we moving up? No. So that's telling me that there's a lot of sellers absorbing all of this buying action at the moment. And it's the guys that made this move happen saying, nope, not interested. We want to go down. So they're absorbing the buying pressure. And at some point, either they will win or they will lose that battle. And we'll see the next flurry, the next flush. It's quite often called. But this is the battleground at the minute. So you want to look for areas, and we're building a volume cluster, look, here. So now it's getting a bit thinner here until we get up to there. So any pushes into here, not particularly worried about. Any pushes above there, not interested. That's kind of your line in the sand. I want to see sellers starting to support me, which they are. Flush, 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 flush. Next leg. Probably heading down here. So this is a 5 tick. So I would scale out 2 there Oh, scaled out 5. I had it set to 5. Idiot. Scale out 2 there. Scale out 1 there. Scale out 1 there. Let 1 run. And move it all to break even. And that's how you would scale out of that. Anywho, I'll leave it there. So there's a load of information to go and watch again and digest. It's just an overview. No real strategies. Well, there's a few strategies in there, but it's very discretionary. Yeah, it's not really rocket science. Everybody at the moment is buying. Do you want to be a seller? Probably not at the minute. When I see selling start to happen, then yeah, but at the moment I am a seller right now, just not here. I'll be a seller down here and I'll be seller up here, but where we are at the moment, we're building volume. I don't really want to be trading short here. We'll get on the next flush, or this is a head fake, so I will get in on the pullback, and then when they make the new head down here, I will get out somewhere down there. So at the moment we're buying, 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 and not actually going anywhere. All that's buying here, massive buying. We didn't even tick up. So if this continues and continues and continues, they will probably make a bit of headway. But eventually these guys are going to go, oh, I've run out of orders. We are not getting anywhere. I've had enough of this. I'm going to get out of my trade. They'll start selling, and everybody that's been selling into them to stop them going up flushes the market out. And get a load of sellers coming in. That lights up red. These all fly down. Delta goes red. So think of it like you got a big 10-ton weight at the moment of sellers who have moved this price down to here. You need 20 tons to push this thing back up again. You can keep adding weight to it as much as you like, but unless you've got more weight than these guys have got, they're just going to drop another weight on top of you and you're going to get squashed. Yeah, these are the buyers now trying to get back in and take control. So we're looking for loads and loads of buying, but no headway. Yeah, loads of buy orders, push back down. Loads of buy orders, push back down. Loads of buy orders, push back down. Eventually these guys are going to go, we can't make any headway, I'm going out. That's when the flush happens. That's what you're taking advantage of. So you need to be getting in somewhere up here, assuming that flush is going to happen. If the buyers manage to push back into this volume, it means the sellers just are not there anymore. That trade hasn't worked. But that's just one way of trading, one way of looking at it. All these guys down here have just made 5 ticks. If that was their game plan, well done, they're out, they're done, they've made more profit. But look at it now. Yeah, all these buyers, and look at where we are. We're back to where we were before all this buying happened. We haven't made any headway. Likelihood is we're probably going to flush down, but we'll see. Delta's going short. We did manage to push up on a slightly higher volume than last time, but don't forget we've pushed down on 6,000 contracts. We've pushed up on 1. We've pushed down on another 100. We've pushed up on 1. So we pushed down on 6. We've only pushed back 2,500 contracts, and we have made no progress. So that 2,500 contract push long has failed. Sellers are in charge at the moment, but that can flip, obviously, on a dime. So, okay, I'll leave it there. If you've got any questions on it, let me know. I'm happy to do more of these sessions and tag them on to the end of the live rooms. So, and I'll do some live sessions at some point, and just trade live on the real account, and just we can play. I might do some recorded sessions as well, just so that I can cherry pick the trades. Not cherry pick them just to show you the profit ones, obviously. Just to cherry pick them so that you don't have to sit through a 3-hour session. I can just cut all the time I'm sitting here watching this thing doing nothing, and just cut to actually the trades. So you just get to see entry of the trades, reason for entry of the trades, exit of the trades, whether it be good or bad or whatever. So but it's probably better if I just record those sessions rather than having to sit through them, because otherwise, you know, I've sat here and made $300 in 2 hours before, because it's just, you can't get any money out of the market. So we're just about to flush these lows before I go. See if we get the pop. Not really, a little bit. Just thinking about it. Didn't really get a pop there, did we? We'll give it a couple of seconds and just see if we get continued selling. But these guys are not moving. Delta's on our side. Loads of selling. We're not making any progress. Don't like it. Scratching it. Okay, so I wanted to see a pop. The reason I got out of that trade is because we sold quite hard into that. Yeah, but we didn't get anywhere. We moved literally 2 or 3 ticks, and every time we ticked down, we ticked up. So we were doing that. Yeah, selling hard, absorbed by the buyers. Didn't work. I want to see it flush. I want to see it pop. So got out, and then we've pushed back up again. We haven't gone far, but don't like the trade. Okay, I'll leave it there. Anything you need, let me know. I'll be in the Telegram group. Just quickly looking at FX. Euro's gone nowhere. Pound odd, slightly more in drawdown. New Zealand dollar CAD, I'm well up on. US dollar yen pushing well as well. So I'm still in 0.3% drawdown. Nothing's moved. Anyway, there we go. There's a flush. Sellers missed it. Happened in 2 stages, but again, you'll see this happening. What I should have done is put that sell order on again, assuming that we were going to get a head fake. So there's a micro head fake. So yeah, there's a head fake, pull back. Head fake of that, pull back. Yeah, it's legs. Yeah, every time it pushes down, it pulls back. I was expecting that to be that. We didn't. We had to take a second run up. It's like second run up at the wall. Like you take a run up at the wall, you bounce off of it. You take a run up faster, you smash through it. That's what we just saw there. I was on the first run at the wall, hurt my shoulder, and then somebody else ran and battered the door down. Missed it. Don't matter. It'll happen again in a minute. Under there. But you see we got a fair bit of buying starting to build now. It's getting whiter and whiter. So we're going to start meeting a little bit. See, there's a lot of orders down here, not a lot of orders up here. We're going to start meeting a bit of resistance down here. Coming in hour before lunch. So, but we'll see. Okay, guys, I'll leave it there. Anything you need, let me know. Otherwise, I'll be in the Telegram group, and we'll have a look at doing some more sessions on this for those that are interested. Okay, have a good day, and I'll speak to you tomorrow, 7:50, same time.